Broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, welcome back. Today is Thursday, 29th day of September, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. When you join that way, you also have access to the chat box, which means you can ask questions, participate in the discussion. Now, on those days when you're away from the office, away from your desktop, not to worry, point any internet connected browser to cfrn.net/live. There you'll find a live real-time simulcast of the show as it unfolds. It just won't have the chat box. Let's open with a word of prayer. Heavenly Father, as we gather together, we praise you for this day and your purpose for it. We ask God that you would reset our agendas as we sit in your presence, for you assure us that where two or more gather in your name, that you are here. Refocus our intentions, refocus our hearts. Your will for our lives does not always reflect our plans. God, we pray today that you change them to reflect your will, not ours. Help us to understand that we don't need full clarity to walk into the unique purpose that you've placed in our lives. In Jesus' name we pray. Amen.
Amen.
Amen. All right, let me give you the numbers from around the world. These are the cash markets, the indices, as they're called. Let me pull in some fresh data. Dr. Tom will be joining us today. Spoke with him this morning. Okay, boy, that looks weak. Let me refresh it. So how are you today, Mike?
It's been just like the last whole week has just been mixed up. I just had to go pull. I just had to go pull one of my neighbor's workers out of a ditch during the break.
Oh my goodness.
Yeah, and so we
you live an eventful life there. That's for sure.
Oh, we have a hurricane going on right now, and so I
really?
lost power this morning several times, and that's why Valerie was worried about it. I think it's dying off now. Jennifer, my neighbor, called me. Well, she called us this morning. Before we were even awake, she called us and said, "Do you guys know there's a hurricane going on right now?" And we didn't. We were sleeping.
Right.
And she said, "My trampoline just flew over the fence into my neighbor's deck, and that neighbor is having work done in his house, and she was worried about our trampoline." I just wanted to let you know. And and our trampoline can only go in one direction. There's trees between us. There's these big green trees, pine trees, between us and the neighbor on that side, and so it can only go over to her yard. But it would have to fly over a whole bunch of things before it got there. But then as soon as 11:30 came, Jason called me, and that's the neighbor on the other side who has the deck where the trampoline ended up on, and he has workers over there right now. He's doing a lot of work on his house, and they got stuck in a ditch trying to back up to his backyard, and so I had to go pull them out of a ditch.
What'd you use to pull them out with?
Oh, my truck. My truck is awesome.
Truck.
Yeah, my truck is awesome. But no, they apparently don't have 4-wheel drive, and I do, and I have everything you need to pull somebody out of a ditch, but so that was during the break.
You don't have one of those bumper stickers that says, "Yes, this is my truck," and "No, I won't help you move."
No, I don't put bumper stickers on my truck.
Yeah, I've never been a bumper sticker kind of guy myself.
No, my truck is nice. But yeah, so that was during the break, and between the hurricane, losing power, getting power back, losing power, getting power back, and all that, my doorbell rang like right at 11:30. I got downstairs and my doorbell rang, and Jada's on Jada's on a conference call right now about how they're going to let somebody go. You know, because they have to fire somebody, and it's not like the old days where, you know, you used to just come in and not have a job.
Right.
Now you gotta have everything all documented and all that. And she's been on
it's like that for almost in some organizations.
Yeah, and she's been on this conference call with 2 other people, and it's like a video call, so they can see each other.
Right.
So you know, at the time, I was wearing socks, cut-off pajamas, and a red shirt, and and I walked over to her, and she's like pushing me away. Don't get in the picture. Don't get in the picture.
Well, some guy, I don't know who it was, but apparently some big company, some senior executive, he didn't think he was on camera at the time, and he was doing something unmentionable, and that went live. So, yeah, that was big in the news the last few days. So
Yeah, that's bad news.
it's a whole new world out there.
It is.
Yeah.
And then, you know, Jason had sent his kids over to get me, and he called me at the same time, and so I answered the phone, and I said, "Hey, Jason," and he said, "Hey, Michael, I need your help," and I said, "Wait a minute, your kids are ringing my doorbell." So his kids come in, and you know, he's got young kids, and you know, and they're really sweet, and now my dog's going nuts. Jada's on this call, and the kids come in, and I'm talking to Jason on the phone, and so I mean, if Jada could have thrown something at me, she would have. But it all came together at once, and I said, "Okay, quiet, kids, quiet." And so then I just got my truck and drove over and pulled the guy out. And yeah, well, that's just part of my morning.
Part of your morning.
Yeah.
All right, let me give these numbers real quick. The Dow's up 23 points, NASDAQ's up 132 points, S&P 500's up 22, Russell 2000 is up almost 6. In the commodity basket, crude oil down $1.54, trading 35.85 last. Gold down $10, trading 18.69.20 last. Silver down 3 cents. And in the Asian markets at the close, Nikkei down 86 points, Shanghai up 3, Hang Seng down 122. And in the European markets at the close, FTSE up 2, DAX up 21, CAC down 5. So basically some pretty quiet trading, both in Asia and in the UK. And we do have a mixed day in Asia. We do have a mixed day in the UK. And it is a green radio Thursday here in the US of A. So with that, if you want to take the screens and
Okay.
give us a recap of what did happen this morning in the live training room, we're ready.
Okay. I am ready. Well, almost ready. Hang on. Nope, not that one. Here I am. Okay. I am
You're
ready.
locked and loaded on this end.
Okay. There we go. This is what I want you to see. All right. Here we go, guys. Good afternoon. Today is Thursday, the 29th day of October, 2020. Let's slide this over. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today we made 3 ticks in the euro. I was over a couple of trades. 10 ticks in gold, 1 trade, and 36 ticks on the ES, 6 trades. So Today it took 11 minutes in one trade to get to the goal for the day. At that point, we're up $150 a contract, and we took a total of 9 trades. On the month now, we're up $11,301. That's over 21 days, averaging $538 per contract per day. We are now on our 177th consecutive day of getting the goal. And, you know, anybody that's not getting the goal on a regular basis, we just need to talk. I need to see what you're doing. Because I had, one of our partners was texting me today and he said, I'm done trading. I can't do it consistently. And that bugs me because it's never been better. The last week has been tough, but the opportunity's been there. You just got to wait for the easy and obvious. Anyway, on the year, we're at $86,758. That's over 202 days, averaging $429 per contract per 2-hour trading day. Okay. Now, if you are not part of the CFRN family and you want to be part of the CFRN family, go to EminiFuturesTrading.com. EminiFuturesTrading.com, and everything's self-explanatory. Just go to the page, and you can easily become part of the CFRN family and start learning how to trade. Okay, so let's get into the trades now on gold. I think I only had the one. Yeah. Doesn't mean there wasn't more than one, but I did lose power somewhere here in the middle. And Valerie took over while I lost power. And everybody said she did a good job. I didn't get to see it, but yeah, on gold, and there was opportunity in here, like from right there and right there. And even right there. Now, you see what I'm doing is eyeballing a trend line here and here and here. But this might have been when I lost power because I didn't do anything. And I had to start everything back up again. What a pain in the neck. Anyway, the one trade that I did take, I missed one over here that I highlighted. I must have gotten power back on by then. And I grabbed one here for 10 ticks. Looking at the YBR trades, they were hitting it pretty well today. This was like a combination of a YBR and a bounce off the BBC. Those are really high probability trades. This was the same thing right here. And this was during the break, but those are really high probability trades. Okay, so I just got 10 ticks on gold today. The euro, we just had a couple of trades. Let me scroll back. I seem to be missing one. Well, anyway, we only got 3 ticks on the euro. This one I think was for 2 ticks. No, it was for 1 tick. The first one was for 2 ticks, and I don't know where it was, but there were a bunch of trade opportunities in here. Well, not a bunch. There were a few trade opportunities in here. And the markets are really tricky right now as we get closer to the selection. And there's something else. Well, I'll say it to all the partners in the room tomorrow, or maybe in the partners meeting tonight. Yeah, I think I'll address it tonight. Anyway, during the break, there was a shorting opportunity right there. And that's it. This is crude oil. We didn't do anything with crude today. You see how choppy it was? There was no reason to be trading crude oil today. The YBR trades were working out, but using the normal trades that we do in the morning session, there was no reason to be trading crude. But if you look at the YBRs, you see this one right here, this one right here, this one going the other way right there, this one going the other way right there. So the YBR trades were working out. But using the rules that we trade by in the morning session, we didn't have too much opportunity. And again, I want to say, if you guys are having trouble in the markets for the past week, it's don't let it get to you. I mean, I would say just don't trade, honestly. Not short term anyway, because these markets have been tough. You know, and I'm gonna get to somewhere where I placed a trade here on the ES. Today is the 29th day of October. So why don't I have anything? Oh, that's because I had everything restarted on me. Anyway, my first trade on the ES was 12 ticks. My second trade was 4 ticks. My third trade was 8 ticks. And my last trade was 12 ticks. So let's go to the ones that I did manage to keep on here because it rebooted on me. Okay, so I had a break even there, a break even there. And those are my last two trades. But the ones that actually made money, the first one was 12 ticks. The second one was 4 ticks. The third one was 8 ticks. And the fourth one was 12 ticks to put me at plus 36 on the morning session. I'm sorry, you know, all the drawings and everything that I put on my charts, you know, when the power went off, they were deleted. So today is kind of an odd day for me as far as showing you what happened and what didn't happen. But I can tell you, on the morning session, oh, here, let me get the spreadsheet back out. That's the spreadsheet. On the morning session, we were plus 10 on gold. We were break even. I don't know, plus 3 on the euro. Sorry, plus 3 on the euro and plus 36 on gold. I mean, the ES. That put us at plus 568.75 on the morning session. Today it took 11 minutes and 1 trade to get to the goal for the day. At that point, we're up $150 a contract, and we took a total of 9 trades. So on the month now, we're up $11,301. That's over 21 trading days, averaging $538 per contract per 2-hour trading day. I'm at my 177th consecutive day of getting the goal. On the year, we're at $86,758. That's over 202 trading days, averaging $429 per contract per 2-hour trading day. And you know, we're doing the same thing every day. I've been doing this for years and years. If you're not getting it, then you need to talk to me or talk to Dwayne, talk to Valerie. Because you know, these are unprecedented times, as I said, and it's gonna get even more interesting next week, and I suspect for probably a few weeks after that, maybe a month or so after that. So you know, you can sit back and watch, or you can get in the game. All right, and if you are not part of the CFRN family, go to Emini Futures Trading.com, EminiFuturesTrading.com, and just follow the instructions on the website. Self-explanatory. It's pretty easy. We've made it easy and affordable for you.
It has never been easier or more affordable to become a member of the family than it is right here, right now.
Ever.
Ever. And unprecedented times.
I'm telling you. These are, and you know, there is more opportunity out there right now than I've seen pretty much ever. Ever. You know, I've seen it like, you know, for a day or two at a time when there are things that are happening in the world. But when it goes on for 6 months, it's never been like this. So take advantage of it while you can. Again, that's EminiFuturesTrading.com. All right, and with that, I'll pass it back to fabulous Phoenix, Arizona, Studio A, looking South Mountain, America's largest city park. There you go, Dwayne.
And there we go. Now, let's take a look real quick at this daily chart. This is the S&P 500 Emini Futures. Yesterday, we backed it out so that we could capture with our fibs the low that was put in back on March 23rd. It's about as close as you can get it. Yep. That was the March 23rd low, all the way up to the high put in September 3rd. And we did just that, just a tad. Get that up out of the way. 35.76 and a quarter. The previous day was 35.76. Took it out. That suspicious new high of one tick. So we pulled back to the BBC. We didn't hold. We came down. We hit the 24% fib. Bounced, got through the BBC, pulled back to the BBC, and again, failing to hold, coming right back down to that 24% fib. So we got basically a double bottom going on down here. Not exactly what I would call a double top, but you get the idea. Right there. And so this is what the market's dealing with. Of course, we still have the coronavirus. Some say we're getting better. Some say we're getting worse. Just depends upon who you listen to, what channel you tune in. But God knows. He's got the answer. He's got the plan. And we're just waiting for him to tell us what to do next.
I think, when I think about it, I think he's been challenging me in this past week with everything that's gone wrong.
Yeah.
And, well, I'm still able to help out my neighbor. So.
Amen. Amen. That's a good place to be. So we've got this trend line overhead here, not a perfect double top by any stretch, not a perfect double bottom, but we could find ourselves pinging around in this area for some time. How many days are we from the election now? Is it 8?
No, it's not 8. It's 1, 2, 3, 4, 5. 5 days, I think.
Boy, time flies.
Yep.
Boy, time flies. Okay, this week on Logic 247, so far, been a light week. And we've had a total of 27 alerts issued as of this morning at 11:30 a.m. 3 never triggered, 24 actionable, 3 stopped out, 13% of actionable alerts stopped out. Typical numbers 20%. Okay, but this is just as Michael said, it's an unusual week in that there's so many opportunities that sometimes that could almost become a hindrance. Now, those were the logic alerts. Those are the ones that come out one by one, 24/7, around the clock as opportunity presents itself. Now, those look like this. And then I'll show you the Concierge Trade Alerts. Okay. Last week, week 116, we had a total of 38 alerts. I think the most alerts we've ever had in one week was 100 because the market was just running on all cylinders and there was lots of follow through. And the number of alerts issued, that often gives you an idea of what's happening with the market. So out of the 38 total alerts, 2 never triggered. That gave us 36 actionable, 4 stopped out based on not risking more than $300 per contract per trade, less when possible. Which brings us to this week, week 117, where we had a couple of gap fill trades right off the bat Sunday night. It didn't. That's what the Z's mean, no trigger. They've since triggered, but at the time we recapped them. There were no trigger. And then we had a short on the Russell. Now, this one alert, 1627 down to 1625, down to 1622. This one alert, trading one contract, was worth $460. $460 per contract traded. Hal, your question, how long are the logic alerts good for taking the trade? That's a great question. Once an important price, important area is identified, it will trigger often more than once, multiple times. So really, it's good until another alert comes out that would in some way override it. In fact, there was a comment this morning. Let me find that comment. Stefan, who is a seasonal worker of sorts, he's a part of the CFRN family. And when he's on with us full time, he publishes a lot of charts. He really is really a good part of a vibrant community. If you guys, if you're a passport holder and you don't hang out in the discussion group, you're missing an awful lot, okay? I haven't been as active this past week as I typically am, but Stefan just slid right in there. He's been publishing charts and keeping you guys up to speed on almost everything that happens. And he posted something this morning that caught my eye. Let's see here, I'll show you. By the way, that red rectangle window is Dwayne's alert 5545 that triggered almost 13 times on the 5-minute chart. Now, I'm not sure exactly. I'm looking for the red rectangle. Looking for the red rectangle. Let me find the red rectangle. I'm missing the rectangle. Stefan, if you're tuned in, would you shoot over a copy of that chart, the one that you highlighted? Here's a 1-minute chart. Here's 30-minute chart. Market is at that line in the sand, 32, 82, 83 area. Bullish above, bearish below. Okay. When you get a chance, Stephen, if you shoot that over, I appreciate it. But we'll take a look at it ourselves. It was, 15 times. 13 times. I know I tell you that important prices, important areas are almost always tested. But let's just have a look at number 5545. See what that's all about. Number 55. Where are you? 5545. That was a hedge. 5545 to be short the S&P at 32.85 down to 83 with potential support at 63. Okay. Now let's go look at that. That was just from last night, so we'll go to our 30-minute chart. Now, 32.62. That's a previous weekly trading zone, by the way. The lowest weekly zone for this week, we're below, which is unusual in and of itself. 3365 slash 3366. And that alert was to be short 3285. 3285. Let's find that. Of course, he was looking at it on a 5-minute chart. So we'll do that too. Let's just drop it to the 5-minute. And yeah, here we go. See, 3285. It's 8450. Let's make it 85 on the money. There we go. Nope, almost. You get the idea. 3285. So this first little drop only took us to 8175. Should put the number up there. That was to sell. 3285. This is really a good example of that important prices, important areas, almost always being tested. And boy, howdy. So this initial drop from 85 took us down to, we'll call it 82. So that took a 3-point move. Here we get back above the trigger, do it again. This time we dropped to 76.50. And then we get back above the trigger, do it again. Then we actually have a bullish cross here. It actually looked at this point like the market might be gonna try to rally itself higher. And then here we are again, another trigger from 3285 down to 3270. That's a 15-point move right there. And then back above the trigger, and another move, and another move, and another move, and another move, and another move. And here we sit right now. Yeah. Hi, Valerie.
Hey, Dwayne. So if I can jump in here real quick and
absolutely, we'd love you to jump in here
and reply to Hal also. As far as how long are the alerts valid, we usually, because of the constraints of the messaging service, make a decision within about 48 hours. But I was hard pressed to close, to show as not triggered the gap fill trades from Sunday night, because we know that 99% time they're going to be filled, and it may be the end of the week, it may be the beginning of next week, but out of just the fact that we need to make a decision on these, I went ahead and marked them as not trigger. But in my mind and in practice, we know that that's not really the case. And I know that if we get back to that point, you will put out additional alerts, and then and the values will likely change. So I know that you're going to be paying attention to that. So the alerts, as long as price structure supports it, the alerts are valid. Hal? That's my 2 cents. That's my 2 cents.
That's well said. Market structure. It's very important that when an alert comes through, you don't trade it just because it's an alert. Remember, we're not just handing out trade signals here. What we're trying to do is to teach you how to learn how to trade. First part of learning how to trade is learning to read the chart, understand the information that's being communicated to you by the couple of indicators that we use, by the movement of the candles, which is the order flow, that's buyers and sellers in the marketplace at work right now, okay? And of course, we have our weekly trading zones, which we look to as fixed support and resistance. whereas the BBC and what I refer to as blue and climbing and red and falling, those are more of dynamic support and resistance. In other words, these two, and these are constantly changing, right? They're flowing with the market, while this doesn't change, okay? And it just so happens that this old zone was still left here from a previous week, quite a few weeks back, as a matter of fact. So anyway, where we are this week, thank you very much for sharing that, Val. Always welcome to pop in anytime. So for this week, we've only issued 27 alerts. 3 never triggered. 2 of those were the no triggers that Val was just talking about. 13% stopped out. The average is 20%. And then Tim mentioned the alerts didn't come out until 9:34 p.m. Pacific last night. So that would be, let's see, 9:30 Pacific. So that would be 12:30. That would be midnight. Okay. So midnight at the Oasis. Today's the 29th. Yeah. So here's where we really started pinging it over here. Multiple times. Yep, and that's where we sit right now. Where we sit right now on a 5-minute chart. Now, let's go back to our 30. Okay. But again, the alerts did not come out because honestly, guys, when I look at the chart and I feel indecision, I just don't post anything. It's, you know, not because I don't want to. I'm as excited about finding opportunity as you are, as we all are. That's why we're here, looking for opportunity. But when I don't see opportunity or I just see indecision, then I have to resist the urge to, as some might say, you know, just go ahead, take a shot. We're not in the business of taking a shot. We're in the business of locating high probability, low risk trade setups, kind of like this. We have a bearish cross. You see blue and climbing. We had this little head fake to the upside. Blue and climbing became red and falling. And we got our bearish cross here. And then we dropped from 32.85 down to 32.63, which again, that's an old weekly trading zone there. Okay. Now that was a Logic 247 alert. And I was in the process of showing you exactly what those look like. They come out one at a time in the channel as opportunity presents itself. Okay. Each one unique. Every opportunity is a unique moment in the market. Okay, and we are week 117 right now. We also have the Concierge Trade Alerts. The Concierge Trade Alerts did get out at 6:30 p.m. Eastern last evening. And if you want to grab a screenshot of those, you're certainly welcome to. S&P, the Dow, the Russell, Crude, NQ, gold, and silver. Okay. All right, so we're sitting on the S&P right now. So last night's Concierge Trade Alert for the S&P was to consider being short 32.53. And that happened right here. I think there might have been just enough movement to take 2 points out of that. 32.53, the swing low was 32.50 1/4. So it was good for a whopping 2.75. points. S&P pays $50 per point. That's the S&P. Now, should the market decide to get up and try to go somewhere, 33.17 is the Concierge Trade Alert on the loan side. So let's put that right there. Okay, that's 33.17. You might want to make a note in case the market can take out this swing high, which was 33.1075. We had an logic alert to be long 33.10. The market just couldn't do it. Just couldn't do it. Buyers are not committed. With all things I mentioned before, between the pandemic and the politics and the, you name it, a lot of indecision in the market. In fact, let's just see for a moment on the daily chart. What do we got for volume these days? Well, we have broken a million, 1.14. So there's definitely some trading going on. Yesterday's volume, 2.5 million. That's a good day. Previous day, 1.5 million. Previous day, almost 2 million. Light day, and there's 1.5 million. Okay, so yesterday was a big day volume-wise, 2.5 million. And then so far today, we are over a million. Probably end up doing 1.5 million today, maybe 1.75 million. All right, so let's see how the Dow fared. All right. Now, see that same little head fake, bullish cross, price pulls away, price pulls back, but it does not find support. Price fails, you get a bearish cross. I would have loved to have been in front of the charts at this point, because that would have provided most excellent opportunity. Now, as for the Concierge Trade Alert, it said to consider being short at 26,360. $26,360. That's about right. $26,360. Let me take a look in the audience there and see if Dr. Tom's here, because we had discussed him coming a bit early. John, I really do think we'll pop on tomorrow. I spoke with him. He sounds pretty good for a sick guy. 26,360 dropped to 26,292. So basically a 70-point move, almost. We'll call it 60. It's $5 a point. It's $300 per contract traded. Then we get back above the trigger. Down we go again, complemented with red and falling on a short. You always want that red and falling. We drop, oh, Dr. Tom is here, so let me get your mic open. So the swing low here was 26162. 26162. And so a little fast math, as fast as I can do it these days, 26360 minus 26162.
You should do that in your
That would
head.
be, I should, I know, 198 points at $5 per point, $990 per contract traded. Now that's if you got out at the exact swing low, which we all know is pretty difficult to do. But we'll save that lesson for later. Welcome to the show, Dr. Tom.
Hey, how you doing, Dr. Dwayne?
Hal, if you will ask me that question again after we finish talking with Dr. Tom, I will briefly sum that up for you. I'd be happy to. Okay, so now again, my attention back to you, sir. Shall I send you the charts?
Pretty please.
All righty.
Because I got some pretty
Do
nice
that.
charts.
You got some good stuff. He always brings some good stuff. Make presenter. Yes.
Show my little screen.
Come on, baby. CFRNgold.com. Clear as a bell. That's one word, CFRNgold.com. And that's Dr. Tom's phone number, 561-753-5998. For the benefit of those who aren't able to watch but are only able to listen, again, the number to reach Dr. Tom, 561-753-5998. And the address, again, CFRNgold.com. So,
Yeah, only very
You were out.
special people get my phone number.
yeah, we prayed for you last week because you was a little bit under the weather.
Well, thank you, sir. I
Oh.
appreciate it.
You all fine now?
Yeah, I think I just been burning the candle at both ends. Everybody's been calling to buy gold because they know that something big's going to happen after the election. Nobody knows
Right.
exactly what, but
Right.
you know, the Bible talks a lot about being prepared, and so that's what's been happening. So I've had so many questions about this that I decided that I want to talk about what I believe will be the fallout into three different scenarios as far as the election.
Okay.
Most people
Okay.
are,
Now you said 3 different scenarios.
yeah.
Okay. I'm
Biden's-
interested in what the 3rd scenario is.
Yeah, well, that's Barney Frank is running for president. Just nobody knows about it.
Okay.
No, the 3rd scenario is a contested election
Mhm.
that could drag out for months. And
And who's in power while that's being drug out?
well, the president's in power until inauguration day,
Okay.
no matter who wins. But if
Well,
it's still
look, yeah,
contested
yeah.
on election
I got
day, and that's their strategy, then Nancy Pelosi becomes the acting president. Can you imagine?
That probably deserves like a moment of silence or something. But everybody really should pray that America does not face that situation, because I do think it would be, all politics aside, just based on my knowledge of her, based upon the things she says, the way she thinks about herself as an elitist and the poor people living in the streets just a few blocks from her, I don't think it would be good for America to fall into her hands.
Yeah, even for 30 days, because that would be the minimum. And think of all the damage she could do with an executive order pen in 30 days. She's wanted to be president, but did you see when she signed the impeachment for the president? She did what only presidents do. She had a whole line of about 50 pens there, and she must have been practicing for hours, because she made one little piece of a letter with one pen, another with another, and then she handed out these pens as souvenirs of something as terrible as impeachment. I mean, she was trying to look like a president, because that's the way they sign bills. Nobody else does that. Anyway, let's get into the meat of this, because if we start talking about Nancy Pelosi, I might get sick again.
Uh-oh. Okay.
So,
And the people that run the internet might shut us down too. So
that's true. It's absolutely true.
Because it's become quite obvious that there are some people that run the internet.
Yeah, and it's pretty obvious that there's some people in the intelligence community that are protecting Biden, just like they protected Hillary Clinton. She should have been prosecuted, and the FBI just whitewashed the whole thing and let her go. And even the FBI director said that she had committed a crime, but she didn't mean to, you know. So they're doing the same thing for Biden now. The evidence is out there that he's a crooked politician, and the FBI's had the evidence for over a year, and they're just stonewalling it until after the election. If he gets in the White House, I mean, if you have dead solid proof of him committing a serious crime, you can't touch him. So anyway, we need to pray a lot.
Yes, we do.
Jesus is the Prince of Peace, and no matter what happens in this election, there's going to be people that are going to commit violence and try to make something out of it. And so we just need peace in this country right now. So this is the question I've been getting. People have been calling up, buying large amounts of gold, and asking me for my assessment of what would happen depending on whether Biden or Trump were elected. So I want to make clear, I'm a preacher, but I'm not a prophet. And so I'm going to call this an informed assessment. Okay. It's my assessment based on 45 years in finance investments. And so take it for what it's intended to be. It's my opinion. You know, how can we know anything about what would happen when we don't even know who's going to win the election? Well, it's actually simple. It's a lot easier to make a good assessment of the results of this person or that person winning than it is to try and figure out who's going to win. So I consider myself sort of an amateur economic historian. I love economics, I love history. And so I've studied the effects of all different types of economic events going all the way back to the Roman Empire. And of course, history doesn't always repeat itself, but you can certainly learn from it. So what I want to do is discuss the fallout that would be the result of each candidate winning and reveal how each would impact you and your family. But more importantly, I don't believe in bringing up problems without bringing a solution. And there's one thing that you can do that will protect you whichever way the election goes. So we don't know who's going to win. We think we know what's going to happen if one or the other wins, or if we have a contested election. But there's some things that we all do know right now. Number one, no matter who wins, gold is in a strong bullish posture.
Yes.
So that's a definite. Number two, the stocks are going to crash on schedule. I don't pretend to know what that schedule is. I think it's a whole lot quicker if Biden were to be elected. But at some point, the market is so overvalued, it has to crash. And then these last three, government spending is going to increase. Well, it would increase a lot more under Biden, but it's still going to increase under Trump. I mean, the national debt has gone up $7 trillion since he took office. So everyone assumed, I don't know about everybody, but a lot of people called me up and they said, Tom, Trump's a conservative. Why isn't he knocking down the national debt? And I said, did you hear him say he was going to knock down the national debt? No. He talked about the things he was going to do, and he did them. He kept all his campaign promises. They assumed that he looks at the national debt the way the Bible does, because the Bible says that the debtor is slave to the lender. Right. But he's a businessman, and for him, debt is not the big boogeyman. It's a tool. and business people use debt as a tool. I think he's starting to realize that the national debt is what Admiral Mullen said, that chairman of the Joint Chiefs of Staff at the time, that the national debt is the greatest threat to our national security, even greater than the threat of China, Korea, Iran, and so on. Because if the debt gets big enough and we do get involved in a conflict, we're not going to have the money to prosecute the conflict. And finally, the dollar will continue to weaken. All three of those are going to push gold up. So again, it's not a question of whether gold's going to go up. Regardless who gets elected, it's a matter of the degree.
Right.
So gold is definitely in a big bull. I mean, if you look at the chart, it's almost too strong. You know, I don't really like to see things going up that steeply, and that's why we've had this pullback, I believe, because it was just kind of getting ahead of itself. But it's building a base right now, and we've got predictions all the way from $3,000 from Bank of America to $15,000 from Peter Schiff. He's basing that on the fact that he's certain that we're going to have hyperinflation. So gold is in a bull market. Now, I don't know if most people follow Frank Holmes, but he's very good. He's on Kitco News. And if you want to know news about gold, I mean, you can find it all over the internet. But Kitco concentrates just on precious metals, not just gold and silver, but also palladium and rhodium and so on. So half the articles are right and half of them are wrong, just like everything else. But at least you have one place you can go to and see just about everything concerning gold. So his headline was, Trump or Biden outcome won't affect the target price of $4,000. So we have Bank of America saying gold is definitely go to $3,000. We have Holmes, who's well respected, saying 5,000. We have Sinclair and Paulson talking $5,000 gold. Paulson, if you remember him, he has is the biggest hedge fund in the world, and he has practically nothing but gold in it. But he also puts his money, personal money, where his mouth is. He's got 80% of his personal net worth is in gold. So pretty wide range there. Okay. Both of these guys are in a big slugfest for the next few days. And the prize is prosperity, or the lack thereof, because Biden's policies, as you see in a second, are scarier than Halloween. Here's the three scenarios. Trump is reelected, please Lord. Biden wins. It won't be a dark winter, but it'll be a dark spring if he wins. A protracted contested election, as I said, under the Constitution, Nancy Pelosi becomes acting president. That's just, please Lord, no. Now, there's some sub-scenarios. Whichever candidate wins, there's three different things that could happen. He could get a full sweep. In other words, they have the White House and they take control of both the Senate and the House of Representatives. That would give tremendous power to the president. Okay, not great, but you know, controlling one chamber, it's a whole lot better than having neither chamber. The president sitting in the White House, where the other party has both houses of Congress, can't get anything done. Fantastic for the new president would be controlling the House and the Senate, and also having a 60-member majority in the Senate, because as most people know, the House It's a simple majority, 51 votes or out of 100, and whatever it is passes. For many things in the Senate, you have to have a supermajority of 60 people. So if any president got that, along with winning the House and the White House, then all bets are off. They can just basically act as a dictator. So I predict that if that happens, if Joe Biden becomes president and they keep the House, and by some miracle, I call it coattails, a lot of times the winner of the White House carries other legislators in on his coattails. They get a boost because he's got a boost. Very doubtful that would happen. But if it did, then I can guarantee you would never ever see a conservative in the White House again, because the first thing they would do is rape the Constitution and get rid of the Electoral College. The Electoral College is our one defense against democracy. We're a constitutional republic, a representative republic. We're not a democracy. And if we ever do become a democracy, then we've lost the country, because the mob can rule. I'm not talking about the mobs that are rioting and all that. I'm talking about the roughly 50% of the people in this country that are supported by the other 50%. They pay no taxes, and they get money from the government. And if you get a majority of them, then they can vote anything they want. They can say, well, I'm going to vote for everybody who makes over $50,000 to pay 75% in taxes and give the taxes to me. And that's what a democracy is. The majority rule, period. It sounds fair, but in practice, every democracy has failed because the people that don't want to work, the people that just want to cause trouble, they get control of enough votes and they ruin the nation. So we don't have enough time, fascinating as all that is, to go into those sub scenarios. It's a very interesting discussion, but since the topic today is the financial impact of the election, I'm going to limit the rest of what we had to say to these three broad scenarios. A little background. Dwayne, I know you probably heard Peter Schiff many times.
I guess I know who he is. Is that what you mean?
Yeah, this guy's been remarkably accurate. If he was a Christian, and he may be, I don't know, he doesn't say that he is, he doesn't talk about it. But if he was a Christian, as accurate as he's been on the international economy, the domestic economy, currencies, precious metals, and so on, we would call him a prophet. Okay, so he's predicting or prophesying a tsunami of inflation. Now he's always warned about inflation, but he's never in such strong terms as he's talking today.
A tsunami of inflation. Those are big words.
Strong words, yeah. He talks about something that's worse than losing money. People losing the money in this crisis, this is a quote, is going to be the least of their problems. What we're going to suffer as an economy is far worse than losing your money. What's worse than losing money? Having your money, but your money losing its purchasing power. It's the worst thing that can happen, and that is what's going to happen. So he's no longer saying maybe or possibly. He's saying this is going to happen. And I see his point. You know, if all the money's gone, the dollar completely crashes, and everybody's in the same boat, well, it's not so bad. But having your money and not be able to buy anything with it, that's adding insult to injury. How long before the crash or the collapse? Remember that every currency collapse has been triggered by debt. And no nation in the world has ever had the kind of debt we have. I should have a slide for the IMF, but I don't. I meant to put that in here. The International Monetary Fund reports on the finances of all the roughly 200 countries in the world. And all of those other countries use the same accounting principles. They disclose all their debt. The United States has never disclosed all of its debt. I used to wonder why it would admit to something as horrible as a $20 trillion debt, right? Well, it's because the reality is much worse. According to the IMF, our real debt is about 10 times what we report. We only report the direct debt, as it's called, the treasuries. But when you add the unfunded liabilities of Social Security, Medicare, Medicaid, and a dozen other entitlement programs, everything from food stamps to free cell phones to rent paid for you, all kinds of things like that. Some people on welfare are making over $50,000 a year. And the ones that register in several different states are making even more than that. So,
Interesting.
when the government, go ahead.
No, I just said that's quite an interesting fact.
Yeah,
Because I know
it's
you
not,
don't just talk. I know that you research everything you talk about. So if you
Yeah.
say it, I assume it's a verified fact.
yeah, in the South, it's not so much, but in the Northeast, the welfare state is living large. And they have caught and prosecuted people for registering as many as 3 different states in welfare. So one guy they caught, or actually it was a lady doing it, but she and her husband were both arrested. She would drive around these 3 states that are all close to each other and go to the different welfare offices. And she was making over $170,000 a year from welfare. Anyway, when the governments, basically, when I say governments, I'm talking about the federal government and the state governments, put our economy in what I call a medically induced coma. The Federal Reserve did what the Federal Reserve does. They immediately cut interest rates to 0, and they launched what we're now calling QE infinity. Remember, we had QE, quantitative easing, which is a nice way of saying we're printing money that's worthless, but they don't want to say that, so they call it QE. Then we had QE2, just like the ship, the Queen Elizabeth II, and then we had QE3, and now we've got what's being called QE infinity. There's no intention of stopping printing because they can't go any lower in interest rates. We could do what a number of countries in Europe have done and go to negative interest rates where you pay.
Did you see the GDP number that came in today?
Pretty amazing.
You got to take all things into consideration, of course, but yeah, I mean, 33.1%. That's everyone, it was expected. It was kind of factored in. People thought it was going to be a big number, but 33.1%.
I don't ever remember seeing a number like that since I've been watching. So it's pretty impressive. But you'll see a chart in a minute where the Fed has ballooned its balance sheet in just a short period of time. It's gone up $3 trillion. Well, how do they do that? They're buying the treasuries because nobody else wants them. It used to be Americans bought up almost all the treasuries, individuals and bond funds. And then they started getting disenchanted, seeing all the debt. And so other countries came in and started buying on debt. China was the biggest. and then Japan wasn't that far behind. Between them, they bought about 50% of all the U.S. foreign held national debt. But now both of them have backed off. Now we have the Fed coming in and buying the debt, which is smoke and mirrors. You probably heard me use this example before. But if you take $100 out of your right pocket and put it in your left pocket and say that I just loaned myself $100, people are going to laugh at you.
Right.
Okay? But that's what's happening. So
now Germany's going to report their GDP tomorrow morning at 5 a.m. Eastern, and their forecast is for a gain of 7.3%. Last time it was a loss of 9.7%. So
right.
we'll see how that plays out.
And they've always had a pretty strong economy, other than Great Britain. They had the strongest economy in the EU, so now they're in that #1 position because Great Britain finally had the sense to get out of the EU. Along the way, Powell and Company, for those that don't know, Jerome Powell is the new head, has signaled that they're surrendering to inflation. They're moving the inflation goalpost to allow for the inevitable. Now,
I forget exactly how he worded it. He had a very delicate way of wording it when the minutes were released. But you're covering exactly.
Yeah, politics. The with recently, well, sometimes we inflation, snapback, deflation, and so on. The fact is that we couldn't have. There's no scenario possible in which we can have deflation, because inflation is not what most people think it is. Not rising prices. Rising prices are a symptom of inflation. Inflation actually sounds like blowing up bigger.
Well, she can go out at some point.
At some point, it has to. So there's so much inflation. I mean, the Fed, some of their white papers, brags about how they have gotten things to where local banks now are helping produce money out of. So anybody that's on the line right now that's ever gotten a mortgage or a loan from a bank, when you and the banker signed that document, you just committed the crime of counterfeiting, because the bank only has to have 10% of the money that it loans out in reserves. So if they give you a $100,000 loan, where did the other 90,000 come from? It was created when you and the banker signed that document. So according to the Fed, 60% of the money, new money coming to the economy today, is coming from loans and mortgages issued by local banks. So if that's the case, and it is, inflation is blowing up the money supply, what would deflation look like? Again, it's not dropping prices. Deflation is deflating the money supply. Well, how could you do that? You would have to call in all those loans, all those mortgages, and the banks have wording in their documents where they can, if they want to, just if they feel like the loan's in danger, they can call it, and you have to come up with it, or they take your collateral. So if we were to have deflation, that would mean complete disaster for the economy. It's unthinkable. All these loans, because the economy's running on debt now,
Right.
they can't do it. So there will never be deflation until such time as we go back to sound money, gold-backed money, and then the economy can take its normal course, which is inflation and deflation, but not huge swings. But anyway, Bernanke actually said, and this is a direct quote, he said, it is in the interest of the national government to create inflation because it in effect lowers the national debt. If you think about it, it's true. The national debt's 20 trillion, and you have 5% inflation that year. That just dropped the national debt by 5%. Everybody else that's been charged, the Fed says, well, sometimes we have to allow some inflation. But he told the truth. They actually deliberately create inflation because that's what they decided a long time ago that their commitment was going to be. So how long before this debt time bomb blows? Remember, every time, every country in the world that has suffered hyperinflation, and that's just about everybody. The only ones who don't suffer in a major economic event like 2008 or the Great Depression are the little tiny countries that nobody will loan money to. So weirdly, the poorest countries don't get hurt by financial crises that hurt the big Western and Asian and European countries. So the national debt's now over $27 trillion. The debt is always what triggers a currency crisis. So how long can this go on? How long can the Fed continue this extraordinary policy? Or as an economist that Peter Schiff likes, Pavel Mordasov, I think I pronounced that right, put it, how long can the Fed keep this time bomb from exploding? Think about it. Here's a statement that
how long do you think?
Well, if Biden gets elected, then it could be imminent. If Trump is reelected, we might have another 6 months to a year. But at some point, it has to blow, because as you'll see in a minute, we've had a number of different kind of balloons or bubbles burst on us, and you can't reinflate a burst balloon. If somebody comes into the hospital with a collapsed lung because somebody stuck a knife between the ribs, that lung will never reinflate on its own without medical intervention, and the person will die. Well, in the economic world, when a bubble bursts, you can't reinflate the bubble. What you have to do is replace it with a bigger, newer, larger balloon. And we've about run out of balloons. So this guy, Mordasov, he says, since the outbreak of the China virus, he says coronavirus, I call it what it is, the United States has experienced one of the most unprecedented economic interventions in all of its history. And I'll take that further and say it's not just the United States. There has never been an economic intervention like this in any country in history. The closest we can come to that is what we call the Asian contagion, when Japan's stock market just completely collapsed and bringing other Asian countries down with it. And then it made its way over here. Before that, I mean, we didn't really care what happened in Asia or Europe. I mean, today, if you're trading, what are you doing? You look at the futures of other countries to try and figure out what's going to happen here. But, back then, like 30 years ago, I think it was, if the Asian markets opened way down, we would open neutral or up. Same thing in the European market. We didn't care.
Yeah, the Globex market it used to be just like sort of a shadow market. It was the thing. It existed, but nobody really, paid it much attention. Certainly, major moves never began or ended during that Globex session. All eyes were on Wall Street, and that is really changed over the last few years.
Oh yeah, I remember the month very clearly. I was at a investing conference out in, I think, San Diego, and I had about $50,000 worth of options out there that were expiring in about a week, and I was doing real good, and they were all up, and I was going to make probably $50,000-$60,000 on the 50 I'd put up. I ended up losing it all. That was when I got smart and I started buying enough time to be right. If I could buy an option, I could buy a longer term option. But that was the first thing. We're all looking at each other like, what just happened? We never cared before what the Asian markets did, and now they're down big time, and it caused us to go down. But anyway, we were talking about interventions. The Japanese central bank poured billions of yen into the stock market. They actually went in and bought stocks. That was practically unheard of. It had happened in a small way before in other countries, but not in such a massive way. And that was the biggest economic intervention in the world ever. Well, what's going on now is even bigger than that. It's not just here in the United States. Of course, it's happening all over the world. So since March and April, both the Fed and the government have injected trillions into the economy, trying to stabilize it and reduce unemployment. But this is at our expense. So these institutions have basically shot all their bullets. They've used all the tools in their toolkit, and they've handicapped themselves for any future interventions. So he says it will be extremely difficult to ever return to so-called normalized policy without triggering an even bigger economic crisis. So for their benefit, because remember the Fed is privately owned, they have made these moves.
And that's a fact right there that probably most folks aren't aware of, never even gave it any thought. It's got the word Fed in it, so it must be federal.
Yep, it is. It's as federal as FedEx.
Mm-hmm.
Right. Yeah, it was smart. It's smart of them because, see, central banks were not popular in the United States. The founding fathers had suffered under central banking. It goes back hundreds of years, and it makes the bankers and the politicians richer, and it impoverishes the regular people. So that's why there's no central bank provided for in the Constitution. But years later, they established a central bank with most of the original founding fathers that were still alive fighting tooth and toenail against it. And it only lasted for about 20 years. That was called the first bank of the United States. And then, before that, all the banks were state banks. Then, I guess about 40 years later, they tried it again. And again, it failed. That was the second bank of the United States, they called it. It didn't have very much imagination. I would have called it something a little more interesting. So for a long time, we had no Fed, no central bank. And when they did finally jam it through Congress, and it was in a Christmas session like they jammed through Obamacare, when people weren't paying attention, ever since then, it's just gotten worse and worse. The Fed has, people say they mismanaged. They haven't really mismanaged. They managed it to their benefit and not to the benefit of the people they're supposed to be working for. So as politicians and economists in Washington deem what's appropriate for the American people, it would be very beneficial for the people these policies were intended to help, and who will have to eventually pay for these policies, whether through inflation or taxation. Well, basically inflation is a tax. If you think about it, you know, the definition of a tax is when the government steals money from you by force.
Right.
People want to argue with me about the by force part, because I mean, they say that the income tax is voluntary, but if you don't volunteer, they will come after you. My brother-in-law,
Yes, they will.
my brother-in-law used to be an IRS enforcement agent, and he carried a gun and a badge. He could arrest, and if he felt like it, he could shoot you. I mean, you had to do something to get shot, but the point is that any taxation is by force. Well, inflation is just a tax by a different name. Any nation that's ever taxes people over 50% of their income has crashed and burned. And we have a lot of people in this country right now that are already paying over 50% when you consider their federal tax, state tax, their city or county tax, real estate taxes, and all the other taxes. But it's only a small number of people. When we get to the place where the average American is paying 50% or more, then the people are out in the streets with torches and pitchforks. So what do? They just hide it. They continue to increase your taxes by devaluing your money. It's just tax with a different name. So the politicians, the bankers, the special interests get the rewards, and any mistakes that are incurred come on our heads. So the reader has to ask himself, how much longer will this go on? Unfortunately, the policies of intervening within the market may go on for much longer than we hope, for the addiction to cheap money only increases the appetite of a hungry government. It's like cocaine to the government.
Yeah.
Austrian economist Henry Hazlitt, in this context, he's not an Austrian person from Austria. He's from the Austrian School of Economics. And this is a saying, or a quote that's worth paying attention to and even memorizing. The only way government bureaucrats know of keeping prosperity going, or the illusion of prosperity going, is to inflate more, to increase the deficit, or to pump more money in the system, and I'll add, or both. Here's the chart I was telling you about. Look back at the first of the year. We're looking at about, what, $4.2 billion in Fed assets. Remember, these are, it says 4 million at the bottom, but it's in millions, so that's actually 4 billion. Now
Right.
look up at the top, $7 billion. So it's increased and that was just to the end of September, just in 9 months. It almost doubled. That's the Fed buying all those bonds we were talking about.
Sure.
So deja vu, deja vu. The Fed and the government are repeating the same stupid mistakes they made in 2008. If they had let the economy, let the market work, okay, companies were going to go bankrupt. It happens all the time. Businesses go bankrupt. Banks go bankrupt. Insurance companies go bankrupt. Let it happen. Most of the time, when these businesses and so on go bankrupt, it's because they were not handling the money right. They were taking unnecessary risk. They were investing in crazy things like these mortgage-backed securities that nobody even knows what they are. You know, I haven't met a banker yet that can explain to me what an MBS is and how to find the source and who's the one that's actually responsible for it. And yet they buy them. They're on their balance sheets. So back then, I wasn't on your show then, but if I have been, on my other shows I've been on and in my writing and so on, I was warning that the bailouts and the monetary stimulus were a huge mistake and that we would have to pay the piper. They would lead to a bigger disaster in the future. Well, welcome to the future. It's here.
The future is now.
Yes. And it's going to be far worse than 2008. And by the way, this isn't about the virus. Everybody's blaming everything on the virus. Post office can't deliver the mail. Oh, it's the virus. Whatever, you know. But basically, the US economy and the world economies were in a bubble long before China attacked us with the virus. The virus was just the needle that pricked the bubble. But it was either going to blow up by overinflation or something else would have pricked it. But the bubble was going to burst. So that's my headline. Normal has left the station.
Right.
Schiff says that everybody wants to go back to normal, the way it was before we heard of the virus. But things were not normal then. The economy was sick long before the virus infected us.
I agree with that. Yeah, there was. I mean, to the naked eye, the economy looked healthy, robust. Numbers were good. So, if it appeared so healthy on the surface, what are the underlying things that would lead you to say the economy was sick?
Well, it's, you know me, I like to use analogies, but I'm sure you've had a salesman calling you before trying to sell you whatever, and he's wearing this nice $3,000 suit, and you look out the window and he's got a Mercedes S-Class out there, and he's looking good, you know. And then you go to visit him in his office, and he says, well, let's not go back to the office. Let's sit out here in the reception area. It's more comfortable, but there's no receptionist there. And if he did go back to his office or any of the other rooms, there's no furniture. And that $3,000 suit's the only suit he owns, and the Mercedes is leased. That's the United States. We have a good face. One of the ways we do it is by lying about the debt. It's actually 10 times bigger than it is. Money that we actually owe to people, and we can't pay it. Our national debt is larger than the total GDP. Well, if that happens in Europe, they're required to kick you out of the European Union because you're going to drag everybody else down. So we're way past that point. So we were sick before, we were in a big bubble before, and let me just show you the bubbles. As I said, once bubbles pop, they don't reinflate. So you need a newer, bigger bubble to keep up that appearance of normal. So into the Fed. Remember in the 90s, that NASDAQ bubble was caused by the Fed. They were just pumping money in, and every single year for 10 years, stocks were up. And you talk about earnings. I mean, a lot of the stocks that went up so much had not just low earnings, they had zero earnings. They had to invent entirely new metrics. They had these internet companies that were hemorrhaging money, kept raising money and spending it, and they were losing far more than they took in every year, and yet their stocks were going up. Why? Well, they invented this metric called eyeballs, and they started counting the number of people that visit the website. And whoever had the most visitors, they used that instead of earnings. But if they didn't buy anything, they didn't make any money. That's bogus.
I know it was the strangest of times. Well, no one bought anything today, but 4 million people came and looked. That became the new currency. Visitors, they were called.
Yeah. Well, that bubble popped, right?
Yeah, and then members, then visitors, they upgraded to members, and then members above that was like active members, which means a person who would visit the site daily, on a daily basis. Back in the early days of the internet, those numbers carried an awful lot of weight. They carried as much weight as real money carries today, because it was the only thing they had to factor with.
Right, because as you say, when they went from visitors to members, the membership was free. All they had to do was sign up and they're a member and they get a password. And then the active members, and then they finally started charging money for memberships on some of the sites, but it was a very, very low amount. So it was smoke and mirrors. And of course, in March of 2000, it started dropping like a rock, and all the brokers were telling people, "Oh, well, just be strong, stay the course, don't get scared."
Don't be a weak hand. Don't get shook out. My God,
Yeah.
all of that.
And the people that listened to the brokers lost all the money in 2.5 years that they gained in the previous 10 years. So then the Fed created a bigger bubble. It was a housing bubble. Started with Jimmy Carter and carried on by Bill Clinton. The government was forcing companies to give mortgages to people. They had no way to pay them. So what did they do? They give them interest-only mortgages for 5 years. So a guy that's living in a little 2-bedroom apartment, one bath, and can barely fit his family in it. He's paying like $500 a month. He can go to this nice brand new house for the same $500 a month. And then when the 5 years is up and the balloon kicks in, then he just walks out because he didn't have any credit anyway. He doesn't have anything to lose. He didn't have any money in the game. Bill Clinton took it a step further. He had 110%, even in some cases 120% mortgages. Well, what's 110% mortgage? Buy a $100,000 house. The mortgage company gives you another $10,000 to fix it up with.
Right.
Well, instead of fixing it up, they buy a big screen TV and a purple Cadillac.
Well, that is fixing it up, right?
Yeah. And then again, when the 5 years was up, they walk off on now 110% mortgage, and they can't resell the house for anywhere near the money that was defaulted on. So that's what caused the housing bubble, which eventually popped. So we think of 2008 as a market crash, but it was really a real estate crash, and it flowed over and affected the stock market. All right. The dollar didn't crash, but mortgages crashed. There was a big credit crash. Nobody could get credit, and so on. But it started with housing. I think this time it's going to be the stock market. It's going to crash. It's going to take housing with it. But there's going to be a lot more because they couldn't get anything bigger than that housing bubble. So they have created the everything bubble. This is the end of the road for the Fed. I mean, they're betting all their marbles that the everything bubble is going to work. They're creating multiple bubbles, hoping against hope that something will work. They're throwing stuff up against the wall and hoping something's going to stick. But you can't fix decades of criminal mismanagement with another new set of policies. And when I say criminal, I mean what they've done is worse than being inept. It was actually criminal in my mind. So here's some of the bubbles: junk bonds, derivatives, housing, treasuries, mortgage-backed securities, even mutual funds will become bubbles. Municipal bonds that are supposed to be so safe, they're becoming a bubble. A lot of municipal bonds have been defaulted on. So Schiff says there's something worse than the virus. The one thing that's spreading right now throughout the country faster than the virus is economic ignorance and misinformation. It's all over the place. It's gone completely viral. And listen to this. Here's how you can fight the virus of ignorance. He says the best thing anybody can do to combat the virus of ignorance is to turn off their television sets or their computers and don't listen to anything that's being said in the conventional media whether it's a news-related channel or a financial channel, I can virtually assure you that every single thing you're hearing is wrong. Now, you should have put in there except on Christian Financial Radio Network.
Now, is that wrong intentionally or wrong by just made a mistake?
Well, there's a lot of dumb out there. I mean, I talk to guys who are supposed to be financial experts, and it's amazing how little they know. So some of it's just ignorance, but they're passing their ignorance on to the people. Part of it is the nature of financial news. Look at who they've got up there talking. It's a bunch of blow-dried talking heads. They're actors reading off a teleprompter. Now, there's a few exceptions. There are some people in the financial shows like a Fox Business, a couple of decent people on Bloomberg, and so on. But most of them are just people that used to be the weather guy and now he's the stock guy, you know, and they don't really know anything. And then the people who are pulling the strings, like Soros and others that are actually funding a lot of this stuff and expect a return on their investment, they're deliberately creating misinformation because it benefits them. Look at when Soros crashed the British pound. He only made a few billion pounds on it, but it cost the British government trillions of pounds to repair the damage he did. I mean, it's like to steal a couple $100 from somebody's house, you burn the whole house down. You destroyed a $300,000 house to steal $200. That's basically what he did. But he's such an evil guy that he used the media. He put out all kinds of false reports about the government and the weakness of the pound and everything. And he shortened it all the way down. And he made a ton of money, and he almost destroyed Great Britain. So I think it's a combination of things. So let's get down to brass tacks. What would happen if Biden wins? Well, as I said earlier, the stock market's going to crash on schedule, whatever that schedule is. But I think that schedule gets advanced if Biden is the one.
I mean, there's the potential. If this market holds anywhere near the areas we're at right now, the day before the quote unquote election, people might just decide to go to cash. And now that's going to look like a market crash. I mean, people have made a lot of profit over the last few years. If they say, you know what, I've done well, I'm going to take profit. I don't wish anyone any ill. I'm not a savage seller. I'm not trying to beat the market down. I'm just taking the profit I earned. Well, if everybody decides to take the profit at the same time, well, price will find a bottom somewhere.
Yeah, you're absolutely right. Remember Y2K?
I do.
Well, nobody could really know what was going to happen. I didn't really think that it was going to be Armageddon and so on. But just to be safe, it didn't cost me anything but an hour. I went to the bank and I withdrew $50,000 in cash. I didn't know enough about gold back then, or I would have just gone and bought a bunch of gold. Much better hedge than the dollar. But at least I had cash that I could spend. And after a few weeks, when the world didn't end and so on, I went and deposited back in the bank. And I was just being careful. But you're right, nobody knows what's going to happen, so we could very well see a lot of selling. I think I mentioned this to you before, but most people buy stocks either on the fundamentals or the technicals, and the smart ones use both. But I've had a secret indicator for about the last 18 months, and that is I've got clients who are millionaires and even a few that are billionaires. And I've been having them call me up and buy hundreds of thousands and even millions of dollars worth of gold at one pop. And I'm just so used to as a broker to know your client rule, you know, so you had to know what was going on and where the money's coming from and so on. So I would ask them, well, where are you getting this money from? Because smart people don't leave the money in the bank. They know they're losing 5% of their purchasing power every year. So they want it working for them. And so it had to be coming from someplace. And about 10% was coming out of real estate and some other miscellaneous investments. But a solid 90% was coming out of the stock market.
Right.
And they were being careful, just like you said, they weren't trying to crash the market. If they sold all their holdings, then it could cause a panic. So they were just taking a little out at a time. But for some of these people, a little is $1 million, you know.
Sure.
And so I was watching this, and this was the one thing above all else that convinced me that we were going to have a crash. And in March, you know, a correction is 10%, a bad correction is 20%. Anything over 30 is a crash, right? 38% in 2 weeks. And I really thought at that time it was going to go all the way down to 50%, which probably would have been healthy for the stock market, and it wouldn't be so much danger if that had happened. But again, the Fed pulled out their printing machine and just started flooding the country with money. And what do most people do if they get money? They buy stocks.
Yeah.
So anyway, under Biden, the national debt.
Some people buy stocks. Some people go to Walmart and get a bigger screen.
Well, that's true. Yeah. But the national debt's just going to eat the guts out of our country. And of course, Biden has promised a national mask mandate and a national lockdown. Now, he didn't come out and say he's going to lock it down, but he said, I will lock down the country if my scientists tell me to. Okay.
Yeah.
Well, you hear people say they researched something on the internet. I hear this all the time. Well, I researched about silver and gold and blah, blah, blah. People don't know how to research. I mean, most of the people say that they do a Google search, up comes a bunch of articles, there's a little blurb on each one, and you can tell if somebody's for it or against it, you know. And whatever.
And, you know, quite frankly, even though I think it even says it, a lot of people don't even factor in that when you search for something, the first 3 or 4 things that populate at the top of the page are actually advertisements.
Yep. And a lot of the other ones are just biased. I mean, we're seeing so many cases where the social media companies are censoring Republicans and Christians and conservatives. And I like Ted Cruz because he was just asking this twit that runs Twitter. He looked like he was on drugs.
You know, that guy, Jack
Dorsey, I think it is.
Dorsey, yeah, Jack Dorsey. He did kind of look like a homeless guy almost in that one video, and he's a really smart guy. Man, you know, I don't know if there's any such thing as too much money, but if too much money can do that to a person, then maybe there should be a limit, because his behavior is quite odd.
Well, he acted like he was on drugs. In my mind.
I don't even know that he's a drug kind of a guy. Honestly, I don't know that much about him.
I mean, like he probably took some Valium or Prozac or something to calm him down because he was just so mellow, you know. Oh, they put it on as a news alert. All 3 of the big tech companies agreed that the government shouldn't regulate them anymore. Like that's a news flash, you know. But anyway, Ted Cruz asked him directly. He said, can you name one instance? He said, you know, I know you're not calling it sense where you're calling it violating your policies. Can you tell me of one instance where you pulled the account of a company that was a liberal or a Democrat or socialist or communist thing? I mean, they allow people to use Twitter and Facebook that are dictators, and brutal dictators of communist countries, and they don't have a problem with that. But then the fourth largest newspaper in the country, and the very first newspaper, the New York Post, was the first official newspaper ever in the country. They're now 2 weeks into locking them out of their account. That's censorship, you know, and it's dangerous. And we'll see more of that if Biden's elected. But what I'm starting to say is, you know, people do research, they'll scan through until they see somebody that's written an article that kind of agrees with their position. And after they read 2 people or 3 people that are sort of echo chamber that say the same things that they think, they say they've done research. Well, I write articles every week, some of them pretty controversial, and I read everything. I read the people that share my opinion. I read the people that would shoot me in the head if they could, and I read the people that are neutral. I read everything. I look at all opinions, and then I make my decision. That's real research. But Biden says, my scientists. So he's already got a group of scientists that agree with him that they want to lock down the country.
Right.
There's no way that we're ever going to completely get rid of the virus, just like we've never gotten rid of after decades and decades of the flu. The guy who's in charge of this little weasel Fauci, that's in charge of creating the vaccine, he's been in charge of creating the vaccine for AIDS for 4 decades. Do you see any vaccine for AIDS? Doesn't exist.
It doesn't exist, does it?
No, they have therapeutics, but I believe that he was a plant. He was put inside Trump's inner circle, and he's the one that told him, "Oh yeah, we'll have a vaccine by the end of the year," knowing that probably would never happen. And you know, Trump believed him because he was such an eminent scientist. But I believe he was put there to make Trump look dumb when the vaccine doesn't come. We'll see if I'm right or wrong. Trump has done a good job of pushing the FDA to fast track, and they do have some good possibilities. But I don't know. It's just their approaches are so diametrically opposed. Trump wants to open up, put safeguards in place. He's spent billions of dollars, you know, providing protective equipment and so on, ventilators, all the things that the governor said they needed. But Biden's idea is just to lock people up in their rooms. So we're getting the same thing in other countries. I was just listened to epidemiologist from Sweden, and he said suicides among teenagers are up 30% because they have complete lockdowns there, the kind that Joe Biden's advocating for. Teenagers, suicide, domestic abuse, people dying of heart attacks and cancer because they won't go in and get their chemotherapy because they've been so scared about this virus. They don't get their heart stents done because it's not essential surgery, so they die. You know? So that's what America under Biden looks like. Stock markets would crash very quickly. He's promised $4 trillion in new taxes. I mean, I've already said it a dozen times. You know, if I'm elected, I'm not going to cut taxes like Trump. I'm going to roll back the Trump tax cuts, and I'm going to add $4 more trillion in taxes. How do people get elected? By promising people they're going to take even more of the money away. I just don't understand the mentality. But they've got them convinced that if you tax more, it's only the rich people are going to pay the taxes. So people are going to vote for him. His mask mandate and lockdown would decimate the economy. But on the good side, for those of us that have gold, it will rise dramatically and quickly, because the most conservative estimates are the national debt's going to grow by $2 trillion a year under Biden. 2 trillion. And that's after all the stimulus for the viruses. You know, they got another $3 to $5 trillion that the Congress is getting set to pass. So you remember, those of you that travel, you know, how New York used to look. You could, on the left side there, it's Times Square. You could hardly walk down the street without bumping into somebody you're getting bumped into. And on the right is what Trump's been talking about. It's like a deserted city out in the desert somewhere. There's one person on the street there that you can see, and it's Times Square, the busiest intersection in the world, or at least in the United States. Now, under Trump, I believe he's going to put us back in the gold standard. At least he's going to try really hard, because he knows that we need real money. If you go back in Christian Financial Concepts and watch the 2 videos I did, there's a short series.
That can't be done executively. That has to be done through Congress.
He has to get Congress behind him. Now, it's funny. FDR took us off the gold standard by executive order. So you would think that all you have to do is reverse an executive order. But it's like this DACA thing. I mean, that's traditionally been the case. Any president can reverse any national or executive order of a previous president, unless it's enshrined in law by the Congress. So Trump tried to get Congress to step up and put the DACA situation, which he believes in, into law. And they wouldn't do it. So he said, okay, well then I'm going to, by executive order, I'm going to stop it. And that'll force them then to put it into law. Well, one of these activist judges said, well, you can't do it. Well, if it can be signed by one president with a pen under the law and under tradition and practice from the beginning of the country, the next president can reverse it. So you would think that since the take us off the gold standard was with executive order, it could be reversed by an executive order. But there's so many people that hate the president. I think that if he, came up with a cure for cancer, they would still vilify him. If he walked on water, they say, "See, look, I told you, Trump can't swim." It's just.
Yeah, I mean, there's literally nothing he could do that the consensus, it seems, or the media, or the mob, as they're calling them, would find favor with.
Yeah. Well, he'll continue cutting taxes. Top right there, you see commerce coming back. And if he's able to put us on a gold standard, then gold will go up dramatically, because I've done the calculations. Everybody can do it for themselves. We've only got about enough gold to back just a small fraction, less than 4% of all the money that's been issued. We had at one point, when we were on the gold standard, 15,000 tons of gold. Now we only have 7,000. We've been leaking gold while China's been buying gold by the ton. And
now, can we know with certainty that we really do have 7,000 tons?
No, we can't, unfortunately. They have not allowed any audit of the money at Fort Knox or the money in the New York Fed in the basement there in decades. I mean, the last photo we have of Fort Knox, the workers down there moving the gold around, they were in bib overalls, and the kind of haircuts they used to have back then, that mom would put the bowl over their head and just cut around the bottom of it.
Mm-hmm. Yep.
I mean, who wears overalls these days except young girls that want to wear combat boots and look cool. But you know,
one of the, you can go down to any number of stores at the mall and buy some overalls that are all ripped up, look like they've been shot with a shotgun, got a little paint splashed on them. I don't know if you can afford them. I mean, but you can at least go look at them. They hang in the store window there. They're quite pricey. One brand's even called True Religion, if I'm not mistaken.
I know, I've seen that. My daughter likes their stuff. Maybe that'd be a good business, just get some old jeans that people have thrown away and put them in a washing machine or a dryer with rocks and some sharp pieces of metal, let it tumble around there, and then throw some bleach on it and cut some chunks out of it with a pocket knife, and then sell them for $500. Why not? I mean, I've seen some artwork where it just looked like somebody just put a canvas on the wall and took buckets of paint and went whoosh, and another different color whoosh. I mean, I could do that. And people pay hundreds of thousands of dollars for this so-called art. So there's no accounting for taste. But look at the bill there. That's an actual gold certificate. You've heard the expression, good as gold. Well, on the gold certificates, at the top it says, there have been deposited in the Treasury of the United States $20, and you got down to the bottom in gold coin, payable to the bearer on demand. So that's what China's trying to do. They're trying to back their money with gold. And if they do, they will instantly become the world reserve currency.
And they're trying to do it before we do.
Right. So that's why I don't, it's going to happen one way or the other. If we have a complete crash, then the people will say to the government, okay, you're not getting reelected unless you put us on a sound money standard. But that might be too late. So I think Trump needs to do that now. And he's hinted around about it for the last 4 years. Started seeing Christian Financial Concepts. I've got a 2-part webinar I did there. Will Trump return us to the gold standard? It's a takeoff of what I did 3 years ago when I went to CPAC, and it's called Trump Hints at a Return to the Gold Standard. He definitely thinks it's a good idea. And the thing is, a lot of people think that they call gold the barbaric relic, and they ridicule anyone who believes in a gold standard because they're elitists, they're globalists.
Something we haven't talked about in a while, Bitcoin. What do you think's going on there? It's trading about 13,000, I think, last time I looked.
Yeah. I guess my bottom line is that if you separate, the coins from the blockchain,
$13,634.30. That's in US dollars.
Do you own any?
Not enough.
Well, I think that you have to separate the currencies from the technology. The technology is going to be unbelievably powerful, and it's going to streamline commerce. I mean, people will be able to do huge contracts like buying 20 Caterpillar earth movers. Stuff that would take weeks in paper, back and forth contracts and stuff can be done in 5 minutes on the blockchain. Wires from one country to another all go through the New York Fed now. It would cut the Fed totally out. People would be able to wire directly. So I think that the functionality of the blockchain is going to endure. And if I was going to invest in anything digital currency related, I'd be investing in the companies that are, building out on that infrastructure. The Bitcoin itself is a big gamble. How many 90% drops have we seen?
Yeah, and well, just in this past month, Bitcoin has rallied from 10,500 as high as 13,000 800.
Right. So if it ever becomes really established as a currency that people can trust, I mean, people say, well, I'm buying this with Bitcoin, but that's like 1% of the population that's ever bought anything with Bitcoin. But if it ever does become a real contender, then the governments will just take it over. Okay. They'll issue the only digital currencies that are allowed, and they'll outlaw all the others. Because there's no transparency. I mean, who knows who Satoshi Nakamoto is? Is it really a guy? Is it a girl? Is it a crowd of people?
I was going to say, I personally think there's a group of people, and I have absolutely nothing to base that on other than my imagination.
Yeah. So they could just someday transfer all the Bitcoin to themselves, sell it, cash out, and everybody's screwed. I mean, nobody knows who they are. Nobody knows who's running it. There's no accountability. So, yeah, I hear people touting Bitcoin as an alternative for gold. Well, it's an alternative investment, but it's certainly not like gold is, but it's certainly not an alternative for gold. Okay, so back to Trump for a second, because I want to get to the contested election. A Trump win, tax cuts for the middle class will stay in force. The economic recovery, I think, will exceed, and the numbers you just talked about earlier point to that, but it will exceed the growth that he had before. He'll work to end all the lockdowns. You know, if he can't get the governors to stop, and then he'll try to get a federal law passed. Gold will rise, but not as dramatically as it would with Biden. But if he does make credible attempts to return us to the gold standard, in that case, it could rise more than Biden, because there's two things that make gold go up. One is fear, that would be Biden, and the other is functionality, that would be Trump. If he tries to put us back on a real money standard, that would be hugely beneficial. I started to tell you, I did the calculations, and if we did a deliberate return to the gold standard rather than being forced to by a crash, in order to cover all the money that's been printed, gold would have to be revalued to $42,500 an ounce. Okay, so if you don't have gold before the election, you're going to wish you did after the election, because at some point, unless we just want to lose our status as the world reserve currency to China, our biggest enemy in the world, then we're going to have to put the dollar on the gold standard. Some people say I'm too low. I've seen economists speculating on anywhere from $50,000 to $80,000 an ounce. I'll take any of those because I've got 50% of my net worth in precious metals. So any of those will make me happy.
You know, I've been seeing an increasing number of commercials here lately that say precious metals are definitely moving higher, but that on a percentage basis, silver, and I've said this for a while, it's just my own thoughts, but I'm seeing it on TV now, and they're turning it into commercials, that silver, percentage-wise, should outperform gold. Do you have any thoughts on that?
I've heard the arguments for it, but I don't think it's true at all. Gold is 70 times more rare than silver.
Right.
Every central bank in the world owns gold. Not a one has silver. They
Really?
talk about
that's interesting.
Yeah, they talk about the industrial uses of silver. Yes, definitely. But gold is a much better conductor of electricity. You know, when people harvest computers, they don't go after the fans and the power supplies and all that. All they do is yank the circuit boards and they get the gold off. They don't even try to get the silver off because it's just not worth the effort. Gold
Well,
has.
this is I'm sorry. Go ahead. Finish your thought.
Well, gold has, gold and silver both had their lows in 1980, and since then, gold has gone up twice as much as silver. When it goes up, silver goes up sympathetically, but not as much. And when it goes down, same thing. Silver goes down, but it goes down more. So the net is that gold has gone up twice as much as silver. It's already surpassed its all-time high by 200 points. And silver can't even get up to half of its previous all-time high. So if you do what
yeah,
I've
it has. It just did recently.
how high did it get?
Now it was $28, I think.
Okay, so a little over half, because it made it almost to $50. At its
Now
high.
I just Googled, why don't central banks own silver? And up popped the site that you mentioned earlier, Kitco, KI.
Right.
But this article is dated February of 2016. So this is what they were saying. What do we call that? 4 years ago, almost
Right.
5 years ago. Let's see. Money's a store of value. We know that. Divisible, portable, homogeneous, durable, etc. Gold has all the above properties. It is for this reason that gold has been used as money for centuries. It is for this reason that central banks all hold gold as part of their reserves. In fact, it is through holding gold that they could get people to use and trust their fiat currencies. Silver also has these monetary properties, and it has been used as money for centuries. Furthermore, central banks also used to hold silver as part of their reserves, as well as issue it in the form of coins. Today, silver has basically been completely demonetized, with virtually no central banks holding silver as part of their reserves, like you just said. The demonetization happened over a period starting in the 1870s and ran until about the late 60s. The fact that silver was being completely demonetized while central banks were still holding gold as part of their reserves is a major contributor as to why some see gold as money, but silver as a commodity. Then it goes on to say that Bretton Woods was virtually the final nail in the coffin for silver's use as money. But I can't read this whole article, but it's getting to a point, because the point they're making with the article is why central banks would start to purchase silver.
What's the name of the article?
The name of the article's why central banks will buy silver. If you Google that, it'll take you to this same Kitco page. Why
Okay.
central banks will buy silver. And let me let you go ahead, because I know you're short on time, and I'll look through this article here.
Okay, great. Thank you.
No,
Appreciate
you go ahead.
it. So Trump is going to bring us back a good economy. It's just the bottom line. So let's look at a contested election. I happen to have had a unique vantage point in the Bush-Gore debacle. I live in Palm Beach County. I actually interviewed one of the judges that ruled on the recounts at the county level for Conservative Truth. I was a Republican vote observer. They'd have at each recount station, they'd have one Republican and one Democrat to make sure there's no hanky-panky. And you've all seen the ridiculous pictures of the chads, the hanging chads, and all that stuff.
Right.
I've got a sandwich bag of them, little historical mini documents. But I mean, that guy that they use the picture of, he's got this magnifying glass, and his eyeball, one eye looks like 4 times as big as the other, and he's staring at this little thing. Is that Chad hanging, or was it just punched a little bit? Did they really mean to punch it? So somebody asked me the other day, do they still use that in your elections down here? I said, are you kidding me? We were so ridiculed because of that no, I mean, we got rid of that before the next midterm. But remember, George Bush won because of Florida, and he won by 537 votes. So I'll just put this little plug in here. If you haven't voted, get your butt out there and vote, and do it early because we may have problems on election day. My wife is volunteered to be a poll worker, and they're saying that at 7 o'clock, if you're not already in line, you're not getting in. The sheriff will be there, just lock the door. So there'll be a lot of angry people, get off work, they get there as soon as they can. The line's a mile down the road and so on. So vote early. And please, that's what I told my Bible college class the other night. If you're Christian, you don't have the right to vote for somebody whether you like them or you don't like them, whether their personality pleases you, whether they're a weasel or a loudmouth. You don't even get to vote for the party that you like best. You don't get to vote for whoever would give you the most free stuff, whoever's the best for your pocketbook, even whoever would tax you the least. If you're a Christian, you have to vote the Bible. You have to vote righteousness. And if anybody's interested, you can go to Conservative Truth. There's an article there called Vote the Bible. And we have the actual words from both the major Republican Party, or both major national parties' platforms saying exactly what they believe about things like abortion, about homosexual marriage, about taxation, about euthanasia, killing older people and so on. It's all there. And it's real simple. If you look at what they say about themselves, not what they lie about when they're on the campaign trail, like in Northeast states where they think that that oil is evil. Biden has said it at least a dozen times. He's on video saying we're going to stop all fracking, we're going to get rid of the petroleum industry totally. But when he's in an area where they do fracking, I guess he forgets that there's a thing called television and videotapes, and he tells people something entirely different. Obama did the same thing. He told the Jews when he was talking to groups of Jewish people that he was 100% behind Israel. And then when he's speaking to Muslim groups, he says, Israel doesn't have any right to do what they're doing. They're taking land away from the Palestinians and so on. So politicians do this, but they can't run away from the party platform. And in my mind, if you know the scripture and you know how God feels about these things, he calls men lying with men, I don't even want to say it. But he says that that's detestable to him. The word is used there. It makes him want to throw up. He says that life begins, in the womb.
Right.
And the Democrats believe. So to me, there's just no way a Christian can vote for someone like that. I mean, Joe Biden has actually been excommunicated by the Catholic Church. They will not serve him communion because he pushes. They don't do this with all Catholics, but someone who's in a position of power, like he has been for the last 47 years, and has been pushing abortion. One group that kind of measures these things said that a Biden-Harris administration would be the most bloodthirsty of any that's ever existed, most friendly to abortion. And so just vote righteousness, vote the Bible, go and look and see, because people are shocked sometimes that when they find out what their party really stands for. They just vote one way because their family has always voted that way, or their union tells them to vote this way. But, use your mind, read the party platform, see for yourself. So anyway, Bush Gore dragged on for about 6 weeks. It went to every court, county court, appeals court, state Supreme Court, federal appeals court, all the way up to the Supreme Court. And if there's ever been an election where every vote counts, some people say, well, I'm just one person out of millions. My vote doesn't really count. Well, what if 576 people who voted for righteousness in Florida in the Bush Gore election, just 576 people had said, my vote doesn't count, and they stayed home, then we would have had a President Gore when 911 hit. And he would have sent a letter to the Muslims in Afghanistan saying, listen, we're really sorry, folks, for whatever we did to make you angry enough to kill 3,000 of our people. Please forgive us and just tell us what we can do to make it right. Bush's approach was a little different. He said, I'm going to come over there, I'm going to kick your butt. And he did. So, vote. A contested election, I say not if, but how long. It's absolutely going to be contested. It's just a matter of whether it's a short time, a few weeks or a month, or whether it drags on till January. Because Biden has hired 900 lawyers and dispatched them to cities all across the country. And they are going to contest every single local level election that they can. Hillary Clinton told him, don't concede no matter what, even if it's obvious that you've lost. So there's going to be lawsuit after lawsuit after lawsuit.
Well, the Democratic Party spent most of the last 4 years trying to delegitimize the president as though he were never really the duly elected president, from the Russia collusion thing to the impeachment hearings, all of the time and money and energy that was wasted and achieved absolutely nothing. The president still managed to get some things done.
A lot of things done. And now this Bob Belinsky guy came out and he's validated, before they were saying, well, these are just fake documents and so on. This guy's a patriot. He was a Navy veteran and he was a Democrat, but the Bidens took millions and millions and millions of dollars. And Joe Biden claims he never knew anything about his son's business dealings. This guy has documentation of meetings where he was in with Joe Biden and Jim Biden's brother and Hunter, his son. And Joe Biden took this guy, Tony Bobolinsky, aside and said, listen, watch out for Hunter, because he knew his son was a jerk and didn't know anything about business. And Bobolinsky was a well-respected business owner. If you can find it, watch his interview on Tucker Carlson, not last night, but the night before. So anyway, the guy's a criminal, and if he makes it into the White House, there's no way to stop him. The longer the contesting of the election lasts, the more uncertainty there'll be. The markets will be whipsawing all over the place, and more people will pull money from the market and put it into gold. So a long contested election would be great for me, because I've got over 50% of my net worth in precious metals, but I would give up everything I've got to keep Trump in the White House. I may sound like I'm partisan, but I'm really not. I just don't want the devil in the White House, that's all. This is that picture I was talking about, the guy, bug-eyed guy staring at things, and those are the Chads off to the right. The real winner in a contested election would be gold, okay? And hopefully when it gets to the Supreme Court, they would rule in favor of the president, and he would stay in the White House. So all we can do is pray God's will be done. So I'll end with this. Peter Schiff is well respected. He's not given to hyperbole. And he made this statement recently: hyperinflation has gone from the worst case scenario to the most probable scenario. And that means people have to act quickly to protect themselves. So people say, well, you talk about gold a lot and you push gold, and that just because you own a gold company. No, it's exactly the opposite. I own a gold company because I believe that gold is the safest investment that there is, and it doesn't make as much profit as what a lot of other things will do, but I'm happy to give up some profit in favor of safety. So I believe, like Peter Schiff does, that we will have hyperinflation, that our paper money will become totally worthless, and the only thing people will accept will be gold and silver. So I would act quickly. Get yourself some gold, even if it's a little bit. I mean, the poorest guy in your neighborhood, if he's got an ounce of gold, will be the richest guy in your neighborhood if he's the only one, after the crash. So I can take any questions. Otherwise, we'll call it an end here.
Let me see if there are any questions here. Why, yes, there are. Let's see. Okay, Natalka, it's been quite some time since she posted this, but I apologize for not sharing it sooner. That's what you get for allowing the Federal Reserve, which is not federal, to set policies on which they should not have control over. People, it's time to wake up. If you haven't suffered enough, it is your God-given right to suffer some more. And then Natalka said, Dwayne just signed in, but would like information on your guest. As I can see, he's very knowledgeable about what is happening. Does he have a website? Can you put that one slide back up that has your phone number on it? The one you
Sure,
put
be glad to.
There you go, Natalka. CFRNgold.com, 561-753-5998. And Dr. Tom would be very happy to talk with you.
Yeah, got the rest of the afternoon free. By the way, Natalka, you're absolutely right about the Fed having so much control. The Fed actually has more control over our economy than the president and the Congress combined. They set the monetary policy for the whole country, and yet their meetings are secret. They refuse to be audited. They say, well, we're audited every year, but they audit themselves. It's like the fox auditing whether he went and ate the chickens in the hen house.
Right.
So the Fed is truly an evil organization as far as I'm concerned.
I'm so sorry I missed these comments in a timely fashion. Natalka also says one should know that when a loan is made, that is brand new money put into circulation, but no one seems to know that there is interest on that loan and money is not created for that interest. So interest charges shrink the money supply, with the exception it makes the crooked banks wealthy.
Yep. Again,
and
very
she
true.
goes on to say, I wonder if 1 in 50,000 knows what money really is. What is it? What is its function? Where does it come from, and who controls it? And she says, our stupid prime minister, we just found out that we are overpaying $100 million for 10,000 ventilators to a contractor for one of his buddies who created the company 7 days before they got the contract. So we have the same crap up here in Canada as you have down there in the US. And then Mike B says, Dr. Tom, I heard they found 60 million ounces in Siberia. Was he
Had not heard that.
joking about that, or?
I don't know. I had not heard that. I was just speaking to a guy today that goes down to the beach in California just about every day, and he's found 73 gold coins there that have washed up on shore from a sunken ship offshore. So gold comes from strange places.
Siberia gold find. Just looking to see. Polis Siberian gold deposit has world's biggest reserves. Russia's top producer, Polis, said on Thursday its giant Sukolog gold deposit in Siberia was the world's biggest by reserves, both among greenfield assets and operating mines. I'm not sure if this is what he was referring to or not.
I'll have to look that one up too. I'm always interested in anything that has to do with.
So the company POLYUS, or just I guess you could just Google Siberia gold find. That's what I did. Let me see if anything shows up on the news feed. I don't see it. Well, okay, let me see if there's any other questions for you. Now, Tim, that's a good question. What if Biden?
Tim always asks good questions. I've noticed that about him.
What if Biden? Yeah, he's a good guy, man. What if Biden makes gold illegal to own? Can't say that's never happened before.
Yeah. I'll put it like this. I was speaking at a large, it was a Christian financial conference in Dallas. And when I got done speaking, this lady asked, well, you know, how can we stop the government from confiscating our gold like they did before? And my answer was the same way we keep from confiscating our guns. And everybody looks at me like, what are you talking about, guy? But bottom line is they can't confiscate something if they don't know it exists. So I buy all my guns privately. I have one weapon that when I was a deputy sheriff had to be registered, and I carry concealed, so you have the gun you carry has to be registered, but none of the others are on the books anywhere. I buy them from private people. Be careful, depending on the state you're in, because in some states, any gun you buy has to be registered. So it's the same thing with gold. The way I supply gold to my clients, there's no reporting to anybody. And as long as you keep your mouth shut and don't tell anybody outside of your household that you have gold, how are they going to collect it? They can't go door to door to millions of homes and search them to see if you have gold or guns. Just impossible. Okay, so just be discreet.
This article here it's behind a paywall. I can't read the whole article, but they're talking about this is so much gold that supposedly they've now discovered lying beneath Siberia, that it puts Russia in position to be the one who goes to the gold standard.
Oh, great. Now we got two communists to worry about.
Wow.
And Russia and China don't like each other very much at all because they each wants to be the big communist dog. But in certain situations, they have cooperated with each other, like, remember the BRICS. So I don't know.
This is from the Wall Street Journal, but again, it's a paywall. I can't read it all. But the not the headline, but the subtitle says the Sukhoi, that's SUKHOI log, LOG, Sukhoi log, widely seen as one of the world's largest untapped gold deposits, could give Moscow a bulletproof currency backstop.
Wow. Well, I think if Trump is smart, and he is, he's a very smart guy, I think he's going to make sure that that China doesn't beat us in this game, because do you know what the results, the fallout would be if they became the world reserve currency? It would be devastating for our economy, number one, but also for our place on the national stage, because they could become the supreme military power. Everybody thinks that the United States is going to be the strongest military power forever. But how did we get powerful? It was by having a lot of money, right? And basically after World War II, we have most of the gold in the world in our coffers, because the countries that were on our side, that we were supporting, were buying weapons from us. And even though we liked them, they were our allies, we were not about to take paper money from them, because we didn't know if they were going to survive, if Hitler was going to take them over. So they paid us in gold. That's how we ended up with all the gold. Not all of it, but the majority. So it's only been the fact that we're a super strong military financial power that's made us the military power that we are. And China could, in just a short number of years, could take over that position if they back their currency with gold.
All right. Are you still there?
Yeah.
Oh, okay, I thought I lost you for a minute. There's a question from Hal. In what form do you purchase gold? In what forms do you hold gold? The audience has covered that. So, I mean, Tom has covered that in detail, Hal, but the number up on the screen, 561-753-5998. He can talk to you about the difference between bullion and what he refers to as investment grade gold. Some people call it numismatic gold. His term is investment grade.
And also, I can talk you how to avoid a lot of the scams. We haven't talked about this on your show, Dwayne, but China is producing millions and millions of counterfeit coins that have fooled a lot of experts. I mean, there's one coin dealer up north. He's a Christian, a very honest guy. He sold about $1.5 million worth of counterfeit bullion, and he feels horrible about it, but there's nothing he could do about it. He didn't have the money to make all these people whole. Somebody came along and said, "I'll give you a good deal," and always be suspicious, or at least careful when somebody gets you too good a deal. And so he bought a lot of gold from this guy and sold it unwittingly, and it was counterfeit. So there's ways to avoid those scams.
Wow.
And then there's the telemarketing scams. There's the online bullion dealer scams. There's been 5 major bullion dealers in the last 10 years. The latest being Bullion, what they call it, Bullion Direct, I'm not sure, that have gone bankrupt. And ironically, every one of them advertised as being the most trusted source for gold on the internet. Well, apparently there's no place you can trust on the internet, because 5 major companies with billions and billions of dollars worth of gold and money just disappeared. And the last one now is facing, the one in the last company I mentioned, he's facing 40 years. He's waiting for sentencing right now, because it wasn't just that he mismanaged the company and lost money, paid too much for gold, sold it for too little. No, it was actually fraud. And so he'll probably die in prison because of it. So you got to be careful.
Yeah, yes you do. CFRNgold.com, that's one word. I'll talk to Dr. Tom. Happy to help you any way that he can. 561-753-5998.
You got it, buddy.
Thank you, Dr. Tom.
It's been my pleasure. God bless everyone.
Appreciate having you with us each week.
Well, it's my pleasure and it's an honor. You're a good guy. I don't care what everybody says about you.
Yeah, I know it's true. Yeah, but thank you. Thank you for sticking up for me. I appreciate it.
All right.
All right, brother. God bless you.
You too.
S&P
Bye-bye.
took a little bit of a rally while we were talking, just for whatever that's worth.
Oh, really? Good.
Yep. The swing high of the session, the head fake, came in at right at 33.10, where we had a logic 247 alert to be long, and it went three ticks over the line, just enough to suck you in. Just when I thought I was out, they pulled me back in, kind of a thing.
Yeah.
We came down, got put in a double bottom here at an old weekly trading zone, because right now we're below this week's lowest weekly trading zone on the S&P. That's how far it's fallen. And looking across here, this resistance that we just ran into, is there any reasonable explanation for it? Nothing I can really hang my hat on, to be honest. But I thought I'd share that with you. I know you got to go. Thanks so much. We always appreciate you.
Same here. God bless.
Take care. Okie doke, guys. Back to where we were before we chatted with Dr. Tom. We were taking a look at the Concierge Trade Alerts. And this 3310 right here, CTA to be long, gold 3310. But the first move up, it only went to 3310.75. So unless you were using some wacky, unimproved, humongous stop, you got stopped out. I mean, once price is back below the BBC, that, if for no other reason, is reason for the market, it's obviously changed its direction. Blue and climbing right up to the trigger, and then it's sold off down to this old zone. Buyers came in, pushed it up to the BBC, pulled back. They finally got price back above the BBC so that it could actually start to climb again. And it did so with the support of blue and climbing. And then we put in a swing high at 33.75. And honestly, my thoughts were that we were headed to 33.40. Guess I was being over hopeful. I was looking for the resistance to come in here. And as we can see, it didn't. We put in a swing high at 33.75. Now, while Dr. Tom was talking, let's see, what did I do? Did I do anything? Guess I didn't do anything with the ES. No, I didn't. So what's going on with the Russell? Russell. Okay, the Russell seems to be trying to turn the ship around, much like the S&P, but it's running into resistance. While Dr. Tom was talking, I did put out an alert on the Russell to consider being short, so that never got triggered. So no worries there. Down at 1536, and it went the opposite direction. So at least everybody was safe there. Last night, the Concierge Trade Alert. Let me find them again. Concierge Trade Alert last night for the Russell was to be short 1535, which came into play right about here. $15.35. And so the first move down took us to basically 1529. Again, the number was 1535. And 1529.5 was the low. So if you round it up to 1530, there's a 5-point move, $250 per contract. And then there was this dab that ran down to 23. So that would be 12 S&P points or Russell points at $50 a point, which would be $600 per contract traded. The long side for the Russell last night on the Concierge was 1559. And looks like that happened about right here. Man, these markets have been some kind of a challenge this week. What was the swing high here? 59.2. 2 ticks over the trigger. Really unforgiving markets, I got to tell you. Russell serving long at 59, and we made it up to 64. So it's 5 points, $50 a point, $250 per contract traded. That's if you manage to get out at the exact swing high, which, as we all know, is a very difficult thing to do. All right, so we covered the Russell, we covered the S&P. On the Dow, we were just starting to talk about the Dow, I think, which we had a short. Concierge Trade Alert was to be short 26,360. And so there was that. And the long side for the Dow, we haven't got there yet. Well, what was the swing high here? 26,803. The actual alert, 26,810. And that was from last night's Concierge. $26,810. So we're approaching it. Now, I guess all I can say is be cautious. Be cautious. The NQ. All right, last night on the NQ, the alert was to be long 11,375. 11,375. Okay. I'm gonna write it down. 11,375, and the swing high was 455. So let's just say it was 450. And the math gets a lot simpler. That's 75 points. And the NQ pays $20 per point. So it's a $1,500 per contract move. Okay. Now, these may still be last week's zones. Let's check and see if I've updated them. The lowest weekly zone is 11 for this week is 11,306. 11,306. Right there. Then the next zone above that's 11,500. Which is right there. Then the next zone above that is 11,569. Okay. So what the NQ is saying right now, we've had a bullish cross. We've gotten above this zone. This was an old zone down here. Let's just get it out of the mix so there's no confusion. So this week's lowest weekly trading zone for the NQ, we got below it. Now we're back above it. Overhead, we've got potential resistance at the weekly trading zone, 11,500/501. And then the next zone above that is 11,569/570. And the zone above that for this week is 11,635. Now, these zones of which I speak, they go out to the partners, to all members. They go out Monday morning, 6:15 a.m. Eastern. 11,635. Come on. 11,635. We publish them every Monday for our members since December 14th of 2009. Price is always trying to get to a weekly trading zone, and you can always tell which one it's trying to get to. When price got below this zone, below the BBC, red and falling, I mean, that's a no-brainer. There's price is trying to get to the zone below. Here, price, this is a transition from a downtrend to what looks like wants to become an uptrend. If we can overcome this resistance here, we got our bullish cross. We got above the zone at 306. Then we had the trigger at 11,375. The final trade to target on all concierge trade alerts is the weekly trading zone above. We do know that important prices and important areas are almost always tested. So what we may be about to see on the NQ is we might catch a dip back below the trigger before we make that run at 11,500. Okay. Now, you also have to consider that you may not get another trigger. It may simply go from here. But important prices, important areas are almost always tested. 11,375. Oh, come on. So we'll just put the number there. Okay, so right now, we're right at the swing low of this candle is 11,399. Okay, so the low of this candle has not yet quite reached 11,375. But if it does, and it turns back up and starts to head higher, then your target on this trade would be 11,500, with, of course, potential resistance at this swing high. Call it 11,445. Okay, so that's the NQ. Now, on silver, last night's Concierge Trade Alert on silver was to consider being short 23.20. Did we get that right? 23.20. Yeah. Sell 23.20. Two ways to remember silver. A $1 move is worth $5,000 on a futures contract. A $1 move is worth 5 grand. 2 pennies, a 2 penny move is $100. So we had a swing low here at 23.14. So that's 6 pennies, $300. Then we get back above the trigger, we drop again, and we drop down to 23. Swing low was 23. We'll call it 23.02. So that's 18 cents. So that's $900 per contract traded. That's what the market made available. And then we got back above for one more move, which was the larger move. We dropped from 23.20 to 22, what was the low? 22.62 and a half, so I'll call it 22.63. $22.63. So 23.20 minus 22.63 is 57 cents. That looks like about a $2,800 move, if I did the math right. And then on the long side for silver, 23.92 was the number on the upside, which we never reached. And we already covered, we didn't cover crude. That's the one we're missing. Last night on crude, the Concierge Trade Alert was to be short 37.20. And the alerts came out at, it's like 6:30. So that's going to be the 1830 candle. So that's this candle here. And the price again was to be short 37.20. Swing low on this candle was 37.21. So that one didn't trigger, but this one did trigger. Okay. And let me put the number in. $37.20. Now again, this came within one tick of triggering. Okay, so that's a close call. However, price stayed. You know, we've got red and falling. We've got price below the BBC. We got all the things that we need to have in place. And on this drop, let me see, 23. See where 37. So we're on gold now. I mean crude, 37.20. $37.20. We got a weekly zone at 37.50 / 55. Then the next weekly zone is at 36.70 / 75. So right there, you're looking at the lowest weekly trading zone for this week for crude. So the zones have really taken a beating this week. I'm telling you, since December 14th, 2009, having all of these overshoots in so many different markets is, I guess I'd have to say that's unprecedented. So 36.75, quarter plus 20 cents. From here to here, from here to the zone, that's $450 per contract traded. Now the swing low, that's obviously a different issue. If you had stayed with it for some reason, 37.20 minus 35.10, let's see, 37.20 minus 35.10. That's a $2,100 per contract move. Now the exit signal, and we went over yesterday what the exit signal looks like on an extended move such as this in crude. And we took out, not only did we take out the lowest weekly trading zone, we sliced through it. Remember, only one of three things happens at a weekly zone. The most likely thing is consolidation. This is what you see here. Second most likely thing is rejection. And here, since this is just a NOLA zone, I'm about to delete. See how price came down, touched that, right? And then all that's left touching it, all that's left touching the zone is wick. That's rejection, okay? I'm just showing you what rejection looks like because this is an old zone, 36.75, okay. All right. So as we're coming down, the step line is on the left side of red and falling, okay? And then it slowly starts to work its way over to the right side. See, we've gone from the left side of red and falling, this little step line, to the right side, okay? Now, the way that we use this is it's never gonna get you out at the exact swing high or exact swing low because that's just not possible. No one knows that anything's a swing high or swing low until after the fact. So you can forget about that. Now, once the step line crosses over, price starts to go sideways, and then we get this huge candle here. So the closing price of this green candle, because it's a short, candle closed at 578. 578. That was what we would call the exit signal. In other words, you recognize you're in an extended move. You're not just looking to grab a couple points. You've decided for whatever reason that you're going to stay with this trade until the chart tells you you should consider getting out. And even though this exit signal at 35.78 did not get you out at the swing low, it certainly did you better service than just the weekly zone. And it's still left, let's see, 37.20. Minus 35.78. Still left $1,420 per contract traded. That's what the market made available. If you entered at the published entry and exited at the exit signal as we teach it at 35.78. So worse things could happen than to have a $1,400 per contract move. All right, so that's crude. Dow, remember this number overhead, 26,810, good trigger long. Silver just kind of flatlining it here. Looked for a minute like it was going to take off, and they got real quiet. The NQ, we already covered that. Okay, there's the Russell. Did its thing. 1559, and the swing high was 64, 5 points. And it's in the process of building a green candle. What's important is that if you'll notice on the entire move down, price is below this green line we call the BBC, stands for bull bear cross. When price is below it, we're bearish, looking for lower prices. When price is above it, we're bullish, looking for higher prices. So it held true to form until this little head fake right here. Just enough, a pop and a pullback and a hold. And there was definitely some points to be had there, but it was nothing more than a head fake. I sent this back down to put in new lows. And now we had a bullish cross. Price pulls away. A pullback to the BBC, and then a continued move higher just might be the signal that the markets have had enough of this drubbing and would really like to see higher prices. On the daily chart, this is what we have. Price rallied from the low put in on March 23rd. At low price, the S&P futures. The low that day was 2171 and a quarter. We had a leg and a retracement, then a leg and a retracement, then a leg. We finally got above it. And then came the pandemic recovery, leg after leg after leg after leg. I mean, the market really clawed its way higher. And that's something you'll notice. Markets tend to do that, claw their way higher. But when it's time to take a drop, all that has to happen for price to fall is for buyers to stop buying. If buyers en masse like a school of fish, everybody gets the message, pulls their bids, whoosh, That's what happens. Then, of course, the so-called smart money's here to catch it and take it right back up. But this resistance provided by red and falling prevented that. Once we got back above the BBC, except for this one little area we had here, which happened to be at that 24% fib, but keep in mind at this point in time, it wasn't the 24% fib. It didn't become the 24% fib until we put in this high, because we drew our fibs, shrink it up, make sure you understand. These fibs were drawn from the swing low of March 23rd to the swing high of September 3rd. It is the new all-time historic high for the S&P 500. Now, situation all-time high down to 24% for non-traditional. All the way down to swing high 41 for all the world like to challenge the all-time story. We did not. It's as if an example of bears just buying faster. It's a very interesting movement here. You see it holds. Put this in, we'll call a triangle, and we could spend some time around in this area. More of that. Let's go for a good long day. All right, for last part, learning from Moses. We've been talking about that for a few days now. Hebrews 11:27. He persevered because he saw him who is from Moses. You must persevere when life gets difficult. You could sum up the life of Moses in these two words: he persevered. It's a fact of life that there's no gain without pain, no advancement without adversity, and no progress without problems. Moses understood that difficulties come into every life, and he knew how to respond to them correctly and move on. And we must learn to do that as well. Whatever the issue is, whatever the problem, whatever the difficulty, you deal with it in whatever manner it can be dealt with. Don't ignore it and hope it goes away, because I promise you it doesn't. You deal with it in whatever way it can be dealt with, and then you move on. We have to learn to do that. I have to learn to do that. Now, as followers of Christ, we should never let our problems defeat us. Instead, we should let them draw us closer to God. Someone has said that we should never let problems get us down, except to get down on our knees and pray to God. God allows specific situations into our lives to bring growth. And without perseverance, we won't get very far. Notice these words: by faith, he persevered. Okay, fair enough. Faith in what? Faith in whom? Faith in God. We're not talking about some white knuckle, flesh-based form of self-help. No, we're talking about the fact that when God calls you to do a job, he equips and empowers you to do the job. He goes ahead of you and provides everything you need. It's just sometimes once you arrive there, you maybe can't seem to figure out where you hid the supplies. Ever felt like that? When you say yes to his plan for your life, you can stand on this promise, Romans 8:28. We know that in all things, God works for the good of those who love him, who have been called according to his purpose. So you must, A, know who you are, B, take responsibility for your life, C, determine your priorities, and D, persevere when life gets difficult. If you abide by these 4 Bible truths, you know what you'll have? You'll have a life that is truly blessed by God. And that's our good word for the day. Now, Michael mentioned it earlier. I'll mention it one more time. If you have not yet become a part of the CFRN family, all you got to do is point your browser to eminifuturestrading.com. That's all one word, eminifuturestrading.com. The training that we provide is designed to allow you to trade with confidence, not fear. Fear comes from the unknown, not knowing, what's going to happen, what the outcome will be. But if you admit to yourself up front that you don't know what's going to happen next, in a way, it takes a little bit of the sting out of that pain, fear, the fear that we feel, it feels like pain, like real pain. When you get stopped out, it feels like a mule kicked you in the gut. And the way the human mind works, not only does it create a visceral feeling, something that we can actually feel in our gut, but it also attacks our way of thinking. Suddenly, all the hundreds or thousands or tens of thousands of trades that you've done in the past, whether they were in sim or in live, wherever, they carry no weight at the moment. The only weight is the weight on your shoulders that the trade you were just in, you got stopped out, which obviously means you're not a good trader, which is not true. The only people who succeed in this business are the people who understand that their quote unquote best trades, their best trade setups, you know, the holy grail kind. The only people in this business who succeed long term are the ones who understand that their best trades are going to get stopped out. And a lot of people can never accept that. Now, there's all kinds of reasons. There's ego, and there's desperation. I mean, there is a bank that wants their mortgage at the end of the month, or a car company that wants their payment. The fellow at the grocery store, he's funny like that. He always wants your cash to get some of his groceries. So anyone that tells you that they're going to teach you a methodology of trading where you don't have to worry about getting stopped out anymore, be very, very careful what they're teaching you. If they're saying with our system, you don't have to worry about getting stopped out, as if you won't get stopped out, and you should ask that question. Oh, so what you're saying is using your system, I won't get stopped out. And he'll go, no, what I said was you don't have to worry about it. Well, but I do worry about it because it's real money. What you have to do is you have to put yourself in a mindset that accepts that there are times when your very best work will in fact prove profitable. And there will be times when your very best work will be unprofitable. Not because you failed, not because you made a mistake, not because you did anything wrong at all, but because the order flow changed right when you entered that trade or shortly thereafter. Now, if you're curious what order flow is, I can show you that real quick. Order flow is simply this. The buyers and sellers in the marketplace. Okay. This runs 10 levels deep. There's an order out there for a total of 101 contracts at that price. Over here, you got somebody trying to sell, or some people trying to sell 118 contracts at that price. Okay. Price is channeling back and forth all day long between buyers and sellers. Okay. Down here, you can have it tally up, so you can, you know, is there more weight on one side or the other? Michael and I have some different ideas. His ideas are very valid. We look at this a little bit differently, but ask him and he'll be happy to share with you how he sees it and how he uses this information. Now, if these are all the buyers in the world, These are all the sellers in the world. There is no indicator, no algorithm, no oscillator, no magic hat with or without rabbit that can predict the future. God did not create this universe in that manner. When God created man, after he created the heavens and the earth, he did not give Adam the ability to know the future. He did not give him the ability to change the past or know the future. And those two things are inextricably linked for eternity. So the next time you come across any kind of website, even if it doesn't have to do with trading, but the person behind the site is trying to convince you that they have outdone God because they can do something that God did not give them the ability to do, and that is to know the future with certainty. You best be very cautious, okay? Because we've got somebody here denying what we read in Genesis. The truth is, we don't know what's going to happen next. However, by using a very simple set of tools, and you know that thing that we can't rely on, past behavior, past performance is no guarantee of future results, and it isn't. What else you got? The market behaves in certain ways, at certain places, at certain times. When price, just like on this chart, pulls back to the BBC, that's the green line, but remember we're on a 5-minute chart now. The highest probability is that when price pulls back to the BBC is that it's going to hold. So it's held now for 1, 2, 3, 4, 5 candles. If we stay above the BBC, then the highest probability is that we will continue up to challenge this swing high. If, on the other hand, this pullback that we're in right now, okay, if it fails to hold, in other words, price drops below the BBC and takes out this swing low right here, then the high probability is that price is going to travel down to this area where it last found good support. So am I saying that price is either going to go here or here? That's exactly what I'm saying. And that is the truth about trading. Now, we have another tool down here called the slingshot. Okay. Now, I use a slingshot a little bit different than Michael. Pay attention to how he teaches you in the morning in the live training room. All members have access 2 hours a day, one-on-one training from 9:30 a.m. to 11:30 a.m. Eastern. You'll notice that on the cycle down here, this is a different indicator than this one. They look the same, but they're different because they're measuring and quantifying different things, okay? When we get red below the center line, right there, the midline, and green above, that has a bearish context. That's saying look for lower prices. Now a pullback to the BBC says anticipate support. Well, we had our support, but what we couldn't overcome yet was the dynamic of the red and falling, which represents resistance. So what we need to do is we need to allow the market to get us into a position where the probability of a favorable outcome to our trade is greater than the other option. From here, there is no high probability from here. Now, we've got red and falling. If price closes below the BBC, and if price takes out that swing low, then we do have a very valid window of opportunity, okay? Price gets below the BBC. We've still got red and falling, which is bearish. The last time price got down to the swing low of 33.09 on this candle, buyers supported it, but they were only willing to support it up to 33.22.5. So there's this little battle going on here. Now, if the buyers win this little battle, then our window of opportunity would be up here. Once we get above that swing high, this little area from above that swing high, should probably make that a little smaller. We're talking 33, call it 33.28 to 33.31, a 3-point trade. That's if the buyers had won this battle. But it looks, for the moment, as if sellers are winning the battle. But remember, this candle here, this wick, that was a red candle at one point. During the 5-minute lifespan of this candle, it opened, it dropped, but before the 5 minutes was up, it not only got back to where it opened, it actually closed above where it opened. That's why you have that little green body. Next candle is bullish, but runs into resistance. Same thing. Now this resistance starting to rub off on the candles because now you got a red candle. And you got another red candle. But remember, buyers made a stand here. But it doesn't look like they were terribly committed to their position, because 5, 10, 15, 20 minutes later, looks like we're coming back to challenge this. Okay, so this swing low was 33.09. Let's just drop this down to 33.04. Okay, now the support came in way down here at 32.87. But from where this thing really powered off right here, you can see I've highlighted this area as support. Okay, so if price drops, takes out that swing low, then the high probability move. Remember, we can't know what's going to happen next with certainty, because God did not give mankind in this universe that ability. Maybe he built another universe somewhere else with different folks. But in this world where we live, you and I, he did not. So most websites are designed to convince you, most trading websites are designed to convince you that somebody, some clever guy, whether he's a nerd at MIT or some guy levitating, you know, in a cave up in the Himalayas, has figured it out. They've unlocked the universe, and they know what's going to happen before it happens. I so want to meet that guy. I know if I just Google teach me how to trade, I'll find millions of people pretending to be that guy who can tell the future, but it doesn't take too long to figure out that while he might be pretty talented, just like the rest of us, he does not know the future with certainty. So what you and I, us ordinary folk, us mere mortals, we have to wait for the market to give us opportunities where we can take a bite out of the market, okay, in an area where we see no hostile actors, no bad actors. In fact, I'm going to even be more conservative. See this swing high right here, right? That swing high could very easily become, now it was resistance on that candle, okay? But this is, if you're just learning about trading, you're gonna learn that what was once the floor becomes the ceiling, and what was once the ceiling, back and forth. The top becomes the bottom becomes the top. It just plays out. Go look at any chart, you'll see it. Just put it on any time frame, you'll see it. It happens on the daily, happens on the minute. Now, see this battle being waged? Really looked like things are starting to swing in the way of the sellers, right? But you see, we're still in the guessing game stage here. If you put on a trade here, then it's a guessing game. You do have some things to base it on, red and falling, okay? We're below the midline down here. I mean, that looks to me like a chart that wants to go lower. But right here, this is critical. Now, the swing low of this candle, 33.09. Is there something specifically magical about 33.09? Not that I'm really aware of, okay? But it certainly got some buyers' attention, okay? Because it ran us back up to resistance. Price always trades from resistance to support, to resistance, to support. So, since we can't know with certainty what's going to happen next, we can use our simple tools and our understanding of how markets work to isolate areas in the market where there is a greater degree of probability that one thing is going to happen over another, okay? So, in other words, if price reaches 33.28, I'm then comfortable saying that I believe there is a higher probability of price reaching 33.32 before you get stopped out. If price continues to drop, takes out this swing low, okay? That swing low again, it's 33.09. I've got this set at 33.04. Now again, nothing magical about 33.04. However, we got a bearish cross. If price can take out that previous swing low where buyers made their stand, okay? Because you got to ask yourself, if buyers aren't willing to support this price again, where's the next place on the chart that they'll be willing to support it? Well, then our eyes have to go to this area, okay? Buyers clearly were willing to support this price. They took it up from 32.90 all the way to 33.32. Is that 40 points? Is that right? 32.90 to 33.30. Yeah, 40 points. $2,000 per contract. Now, so learning to trade is understanding that no matter what somebody tells you or what kind of gizmo they sell you, they nor anyone else on planet Earth can tell the future with absolute certainty. Any of us can flip a coin and be right half the time. That's not even an issue, right? We know that. So once we overcome this whole business of with our ego of being right or wrong, understanding that in this business based on probabilities, there is no right or wrong. Now, boy, that sure looked like it was ready to fall off the cliff, right? Now look. Now it looks like it's ready to rally its way back up. So by looking left, okay, the last time price tried to rally up, it got stopped at the high of this candle, 33.2575. Buyers bought and bought and bought, and then eased up on the buying, and the selling activity picked up, which took us to support. And we've been basically hanging out in the same support area, you know, for what, 5, 10, 15, 20, 25, 30, 35 minutes. Now, I'm doing this on a 5-minute chart, but we could have the same talk on a 1-minute chart, a 30-minute chart, on a daily chart. Bulls appear to have made a decision. Appear. This swing high here, that needs to be taken out, because remember, when buyers were trying to push price higher right here, they failed. When they tried to push price higher right here, they failed. When they tried to push price higher right here, they failed. So we've seen buyers' failure points. There's 1, there's 2, okay, there's 3. I mean, buyers are working hard, couldn't get the job done. So our question now is this last area, okay? Because price is always on the move. Of course, there's times where we have congestion and consolidation, and price just goes sideways for a bit, okay? That's all part of the business. But leg, retrace, leg, retrace, leg, deeper retracement, another leg. That's what the market's doing the whole time it's open. Now, if price can trade above this swing high at 25.75, is there any obstacle in its path to prevent price from reaching this swing high? Well, there is this, okay? Remember, this was a green candle. Buyers tried to make a stand here, and they failed at the high of this candle, which is 33.2775. See, the high of that candle was 33.2550. 33.2550. This is 33.2575. So this candle, the high of that candle, no, that can't be right. Measure that again for you. 33.2775. 27.75. This was 25.75. Okay. So here's where you have to make a decision. If we can get above this swing high, do I feel that there's a higher probability of price continuing on to the swing high, or is there too much weakness in the market? Because I was getting ready to tell you that we really needed to be tagging off of this swing high. We need to see a break of that swing high, in all honesty, to go up and challenge this. And look what the market did. It failed. This swing high was 25.75. This swing high was 25.25. This swing high so far 25. So we'll leave it at this 33.29, because I got to go do a mentoring session. 33.29. To 33.31. What that does is that gets us long the market above the most recent highest price where we saw resistance kick in, and it gets us out. The high of this candle was 33.75. Put a little marker over here. 33. Yeah, that's basically it. Okay. So our window of opportunity, now remember this is just a 5-minute chart. Let me open it up a little bit more so you can see it. So we're looking for areas where there's no, I guess, friction, for lack of a better term. As price climbs, we get above that high. We get above that high. There's nothing between us and that high. Now, that doesn't mean that now with certainty it's going to go to that high. It means I now know with certainty that on a 5-minute chart, there are no visual obstacles to prevent it from doing so. Nothing I can see with my naked eye. Okay. 33.29. 33. Really, 32. And if it swings in the other direction, now stocks are going to close in 6 minutes, 4 p.m. Eastern. Futures will continue trading for 15 minutes, and then futures will close. Then futures will reopen at 4:30 p.m. Eastern and trade for another half hour without stocks, close at 5 p.m. Eastern, take a 1-hour break, and then the Friday session will start tonight at 6 p.m. Eastern when the markets open. $33.29 to $33.32 upside. We've taken into account this resistance, this previous resistance, okay? That's as close to a clear shot as you'll ever get. And then on the flip side, there's support here. So if we're going to be selling, going short, we've got to overcome this support. We've got to overcome this visible sign of support. Now, right here, okay, price is climbing. It tried to go short on this candle. Where did it find support? However, because this candle as you can see, it's an inside candle between these two. In other words, this candle has a lower low. This candle has a higher high, right? So I'm not putting a lot of stock in that. See how that sticks out and that sticks out and that kind of sticks out, and that's just sandwiched in between, okay? So my big concern is that price take out that low, and then we have this window of opportunity. Now, if that concerns you, okay, as you're doing your analysis, it's very simple, because you're making the rules here. What was the low of that candle? Or the high was 3303.75, and then, now, let's just look at the low. Let's look at the low. 3,350. So now we're at 32.99. To 32.97. $32.99 to 32. $32.97. Okay. Now, what I've done here in about the last 15 minutes or so, you can do this with obviously with a 5-minute chart, but all of the reasoning that I used, everything that I said, also applies to a daily chart, a weekly chart, a monthly chart, an annual chart, a 1-minute chart. So the other day, somebody in the discussion group, they use a different platform. They actually, I think, brought up 30-second candles. I knew they existed because I had seen them on TradingView. I just had never run into anybody that actually used them, but this gentleman did. So that's just, all of you know that in the live training room in the morning from 9:30 a.m. to 11:30 a.m. Eastern, Michael uses the range chart, which is pretty quick. Some days it's like a 5-minute, some days it's more like a 1-minute. My default go-to chart and all of the alerts, both the logic and the concierge, are based off of a 30-minute chart, okay? Now, this was a beautiful example. We've been all over the place. Man, it looked like we were going long. Now it looks like we're going short. Remember we talked about that resistance? We had a much bigger box before, but for the purposes of training, I just wanted to embrace this little red candle here, okay? And we'll just take a minute and let this thing play through. And whoever I have a mentoring session with, I will be just a couple minutes late. I hope you're tuned in right now. In fact, Kevin, if you are tuned in, could you shoot me a message in Telegram and let me know that you are tuned in, you are listening? Okay, so all that talking we did about all the multitudes of possibilities of what could happen. while we were never able to say what some people say, like, we know what's going to happen with certainty. We just were kind of honest and said, we don't know, because God did not give us the ability to see or know that. Now, I'm telling my mentoring session that I'm getting ready to close this, okay, and get over and do what I have to do over there. Now, what I do want you to do is let's take one more look at this, okay. Without, come on, there must be a lot of volume surging right now. Okay. Now I'm going to ask Valerie, or maybe I'll just do it myself. I'm going to chop off about the final 30 minutes of today's radio broadcast, because what I just walked you through, we identified where resistance was, we identified where support was, we identified the support and resistance in between, we talked about the importance of which side of the BBC are we on. That determines if we're going to be trading long, if we're going to be trading short, okay? And our little 2-point trade, 32.99, 32.97, worked out just fine. The swing low was actually 32.94.75. But see, we did no magic. No incantation, no candles, no special frequency music. We simply observed what all the other buyers and sellers in the marketplace are doing. We know how the market behaves at certain areas. We know that when price pulls back here, we're going to probably find support. And then when it pulls up like this, we're going to probably find resistance. And as it came down and found this support area that we highlighted, what happened? Bounced right back up. This candle closed, this one opened, took us right down again to a swing low at 32.94.75. Now we're bouncing. Okay, so let's say you took your 2 points, 32.99 to 32.97. Okay. And you go, well, yeah, that's great, but I mean, that's $100. Come on, let's be real. It's the S&P pays $50 a point. Yeah, okay. You did a great dramatic showing of how to figure out where to find 2 points in the S&P. But before I go, I feel obligated to make sure that you understand the importance of the 2 points. Let me insert volume. Okay. Now this big candle coming down is 114,000 contracts traded. I mean, previous candle to that had 27,000. Then all of a sudden, the next candle does, how many did I say? 114,000. Then the next candle, that one did 55,000. Okay. So without being able to know the future, my thoughts are that the highest probability opportunity from here, and you got to keep in mind that the markets, the futures market will close in 10 minutes. Now, this happened 5 minutes before stocks stopped trading. Stocks stopped trading at 4 p.m. Eastern. So at 5 minutes to 4, 3:55 p.m., there was a rush of people to exit the market. You should always take a look at that final 5-minute candle each day. You might find something to work with there. Okay. So we had a leg, we had a retracement. We went sideways for a while, we consolidated. We made a drop into an area that we knew could be potentially good support. In fact, it was the swing high of that candle, you watched me do it, that I used to draw the line over that became the low point of this candle. 32.94.75. Okay, well, looks like it overshot it by a little bit. Let's see. Candle. Basically, call it 32.97. Let's not split hairs. All right, so coming up here, what's the next most high probability thing that's going to happen? Resistance. When you approach the BBC from above, you expect support. We got support, just didn't hold. It gave way, which drops you to the next level of support. Okay. Oh, let me check my messages. Oh, good, Kevin. So my mentoring session, who I was trying to apologize to for being late, just popped into the radio show. I wish I could turn back the hands of time and walk you through what we just did. But the good news, Kevin, is that you'll be able to, once the show posts to YouTube this afternoon, you can scoot up to about the last 45 minutes and you'll be able to see everything that we did and talked about here. Now, remember guys, we used a 5-minute chart, but every principle that I just went over, that everything that I just explained, everything I tried to help you understand, those same principles apply on a 1-minute chart and a 4-minute chart. I don't personally know anybody that's ever traded a 4-minute chart, but got to be somebody out there somewhere, right? 30-minute chart, hourly chart, daily chart, quarterly. Markets are fractal in nature. And that's a term you might hear a lot and you maybe don't, it doesn't really make sense. But what happened, what we saw happen here on this 5-minute time frame, the whole dynamic, every bit of it could happen on a daily chart. Price is going to always, now remember this is in particular about the indices, S&P, Dow, Russell, and Q. They were built to go higher. You're like, wait a minute. Well, that sounds like a rigged game. Well, it is what it is. But the indices were designed to go higher over time, just like the S&P has 500 best of breed companies. Well, if one of those companies misses their earnings a couple times, or for whatever reason, their stock price starts to continually and heavily decline, that company will be removed from the S&P 500 and replaced with a very strong bullish company. Now, the same is true of the Dow 30, the Russell 2000, the NQ. That's how the indices work. That's why over time, if you were to take a chart and go all the way back the very first day the S&P 500 ever existed. It starts in the lower left-hand corner of your chart and continues all the way to the upper right-hand corner. Okay. Now, I can't say that about gold because that's a different animal. The S&P 500, okay, that's an index of 500 large cap companies. And by combining these 500 companies, the idea is that over time, an investor will do well, because if those folks who manage this index called the S&P 500, if they manage it well and only keep 500 really good large cap companies in there at any one time, and are quick to get rid of those that are pulling it down, then this price, and some of you may not even know this, but right now the price of the S&P 500 Emini is $3,300.75. You know, for the longest time, going back years, I just thought these were just numbers that I didn't even tie into it for a while. Probably somebody taught me. You know, this is the actual price. I mean, I knew it was called price, but yeah, but it's not really the price. But yeah, that really is the price. Okay. So they're always going to go higher over time. You can't say that about gold, can't say that about silver, although you know that I'm bullish on metals, and I do think that they both will appreciate long-term over time. Crude, you know, I'm not so sure that even if the conservatives win this election, what if they don't win the next two? What if they carry through with this zero emission output thing, the new Green Deal? Where does the price of crude go then? Does something that was once $140 a barrel, we've already seen it become $40 a barrel, does it become $4 a barrel? I mean, pretty soon the barrel's worth more than the stuff you're putting in it, because you can't use it anywhere. So I can't make the same kind of a statement about crude oil. Precious metals, God created them. He shut down production after 7 days, sewed them up in the belly of the earth, said it, that's it, I'm not making anymore. Finite supply. Now, the S&P 500, we just recently rolled over to the December contract. That's what the Z means, December. Now, does anyone know how many December contracts were put up for sale this year? So we go through the same cycle each year. And the final contract in the cycle is Z, and then we start over again. But this year, when it came time to start trading, the December, as it's called, S&P 500 E-mini, I mean, we're still in October, but we're trading the December contract. Does anybody know how many are available? How many of those December contracts are there? It's a trick question. There's an infinite supply. Well, that doesn't make sense. Well, I didn't say it did. I didn't say it didn't. I'm not here to judge. I'm just trying to explain the difference between trading something that is physical, something that is limited in quantity, and things that are purely man-made. And it's important that you understand that this, you can't trade the S&P 500 index. Man had to go a step further and create derivatives like futures. and options to be able to trade the S&P 500 E-mini. Okay, I've gone way over today, guys. I want to stop here. Kevin, I apologize to you that we ran way past the time for your mentoring session. So I'm going to sign off, and then I'm going to telegram you real quick on my phone, and then you and I will jump into our session. So please don't take off on me. All right, guys. If you didn't catch the whole part of where we talked our way through this trade, where the windows of opportunity were, why, I think there's 30, 45 minutes here of really good training. If you'll remember that you can apply what you learned during this time period to the S&P, to the Dow, to the Russell, to the NQ. And yes, you can apply it to gold and to silver and to crude oil. The only thing is you got to remember there are actually limits on gold, how much God created. There's limits on how much silver he created. And crude, and the other thing with crude is, how much longer will we be able to use crude? Maybe for a very, very long time. But there's a lot of people out there that are very anti-fossil fuel. Now, in closing, we did the deal, okay, the trade, which was 32.99 to 32.97, and then I said the highest probability thing to happen next is that price, as we were building this green candle, I said overhead, we've got the BBC, we've got red and falling. Important prices, important areas are almost always tested. So this did 32.99, bounced, came back, did it again. The second time it does it usually has greater profit potential and less risk. And this time we dropped all the way down to 32.88. From 32.99 to 32.89, that's a 10-point move right there. Okay, 10 points, $50 a point, $500 per contract traded. That's what I said, $500 per contract traded. Once you earn the right to trade 10 contracts, you can do the math. But what I really want you to understand is just the power of 2 points, okay? We took a little 5-minute chart. It just, we ended up on it for some reason. So somebody asked something about a 5-minute chart. And then all we did was we read the chart. We identified support. We identified resistance. We knew that red and falling represents resistance. We talked about this would be our long trade if that's how it unfolded. And then we said if price could take out that low, this would be our short trade. We got it once, we got it twice. Markets are closed right now. In 11 minutes, markets will reopen for 30 minutes. It's usually a very quiet time of day. And then the whole shebang will shut down at 5 p.m. Eastern. 6 p.m. Eastern tonight, markets reopen. That is the beginning of the Friday session, even though it's still Thursday night. Kevin, thank you very much. Kevin, I'm going to buzz you on my phone here in just a second. Seriously, guys, this last 30 to 45 minutes, I think there's a lot of value in there. Maybe you watch it once, maybe you watch it twice. Maybe it starts to sink in when you realize that your only job as a trader is to find these areas where if price gets there, there's a much higher probability of it doing one thing over another thing. Otherwise, you're just reading tea leaves. You're just flipping coins. You're just guessing. You're just the same as the next guy down the road on the internet. Don't do that. No. Accept the fact that you don't know what's going to happen next and that no one else does. But even though you don't know what's going to happen next, using some very simple tools and the strategy we teach you, you can know with some pretty doggone good certainty what the next high probability move will be. Okay? Now, I suppose I could do one of those end zone things here, but I don't have a football spike and I'd probably trip over my cleats. No, I'm not much of a sports guy anyway. But I'm not going to stand here and do some kind of an end zone dance because it did it and did it again as I thought it would, because it could have gone the other way. I didn't make that happen. Just looking at the chart, it appeared that that would be the highest probability thing to happen. Now, once you learn to identify what the next high probability thing is, you're almost there. You're almost there. But that's the most important thing, is learning to see and understand what the next high probability move is going to be and understand why. That's like 80%. The other 20% is you understanding that you have no control over the order flow, buyers and sellers in the marketplace who can change their mind anytime they want, for any reason that they want. So in other words, if you've correctly analyzed the chart and you've correctly identified what the next high probability move is, guess what? You're still going to get stopped out. I know nobody wants to hear that, right? So far this week, 13% stopped out. Yesterday it was 10%. Day before it was 8%. I'm looking for weekly totals here. Okay, this is last week. Okay, we only had 38 alerts based on current market conditions, and only 3 of those got stopped out, which is 9%. But that's not a typical number. A typical number is 20%. Okay, so even when you can read the chart, even when you can clearly see what the next high probability move is, you're still gonna not be right or profitable. We don't use right and wrong. You're gonna still not be profitable about 20% of the time. You may have a couple days where you're not profitable 40% of the time, but then you may have a couple days where you're profitable 100+% of the time. It's getting away from the idea that you somehow have gotten it. Now all you got to do is just look at the chart and click. No, you've got to read the chart. You've got to analyze it. Now, your ability to look at a chart, to read it, to analyze it, to process the information, and arrive at a buying or selling decision, will that go from hours down to, a few minutes? Yes, over time, if you apply yourself, okay? I'm done. Once you get me started. All right, listen, Guys, thanks so much for tuning in. If you want to become a part of the CFRN family, just go to eminifuturestrading.com. Start trading with confidence versus fear. That's how we got into that whole discussion right there. I wanted you, I don't want you to be afraid of the 20% of the time that you're going to be unprofitable. I want you to accept it. It's just like, you know, there's a monster under your bed, but your mom keeps telling you, oh, there's a monster under your bed. But you know there is. And so finally she goes, yeah, but it's just a tiny one. It's a baby monster and he's already asleep. And then you fall asleep. Right? Okay, maybe not a great analogy. It was off the cuff. But if you come here, if you want to be a trader, you don't have the time to learn everything you need to learn right now, you can still begin your journey. We've made it affordable. A trader needs 3 critical pieces of information: what to trade, when to get in. Now, that could be time or price or both, right? When do I get in? When do I take profit? We provided traders with all 3 of everything. Logic 247 runs 24/7. I'm analyzing these charts around the clock from Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern. What you saw me just do with that chart, that is my life. That's what I do. It's not glamorous. It's not sexy. It's just what I know how to do. So I do it, right? And the only time I post a logic alert is when I see something that to me looks like high probability. Like that trade we just did together. I want you to feel like you were a part of that. Every step, you were right there. All of the reasoning, you heard it all. It's all right there in that final 30, 45 minutes. So how it works is we have class every day, 9:30 to 11:30 a.m. Eastern. And once you become a passport holder, you're welcome to class every day, Monday through Friday, and the Thursday night workshops. We have a members only workshop on Thursday night that happens to be tonight. So if you're thinking about becoming a passport holder, today would be a good day, because that means you'll get to come to the workshop tonight. We train you 2 hours a day to learn how to find these opportunities, just like I was basically training you a few minutes ago, okay? But that's what Michael's doing every morning on the range chart. And we'll do that tonight in the workshop to a different degree. But as you're learning, we're sending you these alerts. You're still just learning how to trade, but we're sending you the alerts. We send the trade to your phone, to your desktop, your tablet, even all 3. All 3 of my devices, my computer, my tablet, my iPhone, they all go dee-dee-dee at the same time when I send out a message. When your device makes that noise, you open your platform, you look at the chart, you make sure that market structure is as it should be. Place the order, exit at the target. Everything you need to know is on this page, and a couple of my half-baked attempts at creating videos, okay? Just remember this, 9 out of 10 new traders fail. It's a fact. Futures Magazine wrote an article, 2006. 2005, I decided to go from being an equities guy to a futures guy. So of course I got to get a subscription to Futures Magazine. It's one of the first articles I ever read. 9 out of 10 new traders fail. Man, my heart sank. They went into all the statistics, but you know what they didn't tell you in that article? It's still out there. You can go find it. You know what they don't tell you in the article? Why? I mean, I was stunned. How could 9 out of 10 people fail at anything? Brain surgery, a Navy SEAL, astronaut. 9 out of 10 fail? Something's got to be wrong. Or this whole thing's rigged. It's like the curve where ain't nobody going home with no money, or Vegas. Because you know, what you win in Vegas stays in Vegas, right? Okay, right. Why do 9 out of 10 fail? Because they don't have a teacher. They got people that sell them software and magical indicators and mystical oscillators and, you know, stuff. We've all bought it. Most of us have bought tons of it. And let me just ask you a question you don't have to answer. How many times did you buy something that you looked at less than 5 times on your chart and then just kind of pushed it aside and went back to looking for the Holy Grail? I mean, you just spent $50, $100, whatever the case. But am I right? You just keep going back to Google until your fingers bleed, looking for that Holy Grail that does not exist. It's like looking for a black cat in the dark that doesn't exist. You can't find it, not because it's dark and not because it's black. You can't find it because it doesn't exist. And the way God created this universe and the abilities he gave man and his machines, you're never going to know the future with 100% certainty. But you can learn what the next high probability move is. You see Michael in the morning do it. Each week when we publish our results, by the grace of God, with Logic 247, we have averaged 20%, only 20% being stopped out over the last 117 weeks. And that's with a full accounting of every single alert that goes out. You know, Valerie provides us the third-party accountability. She goes through every one of those things. And if it's one tick off, no, it's stopped out, or it's no trigger, whatever it is, you know, it's an honest report. Now, how do you get from where you might be now to where what we just did together with that chart on that trade? How can you get from where you are to where you want to be? Well, you can spend a lot of time and a lot of treasure. I have students who spent 10 years, $300,000. One guy in particular, just thinking about. That's one of the more extreme, but 1 to 5 years, that's not a stretch at all. 25 to 75 grand on courses and classes, not a stretch at all, okay? People are spending all of this time and treasure, but not getting any real help. Why? Because that help doesn't come with a teacher, an actual person that you can hold accountable and say, help me. Okay, I did this. I thought that's what I was supposed to do, but this happened, and we'll figure it out. It might not be your fault. That's really important that you understand. Quite often, at least 20% of the time, the market does not do the next high probability thing, or it does it, but it misses it by 1 tick. Hey, it happens. Well, maybe I just don't have the patience for this business. Maybe you don't. maybe you don't. That's why we did one of the other reasons we did what we did when we rolled out Emini Futures Trading.com version 2.0. Okay, it's because now you can come on and get everything that we have. It's 97 bucks a week. Okay, no long-term contract, cancel, anytime you want. Just give us 3 days notice before your next billing date. If you don't want to be billed, we don't want to bill you. And if you don't want to be billed, that means you don't want to be taught, which means, I guess I don't want to teach you. You don't want me to teach you. So you understand, it's as simple and fair an offer, really, as I believe you'll find anywhere out there on the internet. And I pointed this out earlier. And as I close, I'll show you. Okay. Now remember, we're not trying to knock them out of the park. That's not what we're about. But if we go back to the beginning of this week, week 117, these two actually filled, by the way, but the time limit had expired, so that's why it says no trigger. They weren't big trades, but still trades. Sunday night, Russell, I sent out the alert, sell 1627, initial target 1625, and then the weekly trading zone's down at 1621/22. That alert, if you were in it with one contract, if you sold one contract of the Russell, it paid $460 per contract. So obviously, if you're a 10 contract trader, it was $4 grand. But for the one contract guy, it was $460. The next one on the NQ paid $260. And this one on silver paid $175. And this one on the S&P paid $112. This one on the S&P paid $387.50 per contract. It's $345 per contract, $190 per contract. So one of those a week, just one, will take care of this. Remember, everything a trader needs, all under one roof, one low price, live teaching every day, unlimited one-on-one mentoring as you need it, cancel anytime, no questions asked. Do you really want to become a trader? The ball is in your court. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.